What up, everyone? Welcome to Financial Education and Business. So, today I'm just going to be researching stocks. So, if there is any stocks that you want me to research, um, drop it in the comment section. Put in the comment section. Until then, I'm just going to do my own research until somebody joins and go through the news, what's going on, what we can expect tomorrow, and what the overnight market is going to look like. That should be open in 1 hour from now. So there's been a lot of developments recently with Trump. Scott Bessent also said something about he commented on how certain sectors within the United States are in some kind of recession. But if you have a stock you want me to research, go ahead and drop it in the comments. If you have a stock you want me to research, let me know in the comments. All right. So overall, until I get a stock recommendation for research, I'm just gonna go read through what's going on in the news. This is Unusual Whales. They track what's going on in the broader economy. So here, Donald Trump in an interview just now, the stock market has hit all-time high, and it's true. So let's see if we can actually go to YouTube and try to find that interview. Trump's supposed to be interviewing right now, so I don't know if he is. Trump live. I think he's supposed to go live at 8 o'clock today. Is Trump going live today? I think he is. Is Trump going live today? Where is Trump today? Real time. Let's see if we can find something here. I thought as of lately scheduled, there's nothing here. As of latest, it looks like scheduled. There is no confirmed public live events going on. Current stats and tracking. Donald Trump. So current Donald Trump activities and location documented in real time through platforms like Where is Trump today, which sources information from other social White House agenda, recent movements. He was at Mar-a-Lago Beach, Florida, over Halloween. Visited Trump today, so nothing. Doesn't seem like he's going to be anywhere. But, however, Donald Trump, in an interview just now, the stock market hit an all-time high. Many times with virtually no inflation. Here is quick news from CNBC, real time. Paul Tudor joins. If anything, markets now are so much more potentially explosive than the 1990s. Yeah, because there's a lot of people that argue, well, AI kind of, destroyed. AI is the only thing that's keeping the economy afloat. That's true. And that it is a bubble, like the dot-com bubble. But the reality is that it's not what's going on. The what's going on is that most of the companies back in the dot-com bubble, they went public, or there were businesses that were running, but they didn't have actual businesses. With the AI though, we're actually seeing companies making money off of it. So because of that, they are definitely not the same or a similar time frame that we are in when the dot-com bubble happened. About an hour ago, a reporter, could I ask you, some experts warn about the AI bubble. Are you concerned? Trump what's an AI bubble? Um, some experts say that some investors are overreacting. Trump, everybody wants AI because it's the new internet. It's the new everything. The one, uh, it's one of the biggest things anyone has ever seen. So everyone wants it. Yeah, I mean, the only problem is if you don't get it. Yeah, so practically he's saying, listen, it's on you for being dumb. Let's listen to what he says.
Sir, can I ask you about what's the AI problem?
That's what some experts say, that some investments,
There's no
are
problem.
overreacting.
Everybody wants AI because it's the new internet, it's the new everything. It's one of the biggest things anyone's ever seen. So everyone wants it. Yeah, I mean, the only problem is if you don't get it. In order to get it, you have to be able to produce tremendous amounts of electricity. And we're allowing them to produce and make their own electricity. This way, they don't have to rely on government. And by the way, they're making electric plants that are so sophisticated and so incredible, so much beyond that companies that make and service electricity, you know, the Con Edison, all the different companies that do that and do it well, but they've never seen anything like what's happening. It's almost a revolution in the making of electricity, the level of sophistication.
There you have it. So Trump kind of saying, listen, the only bottleneck in AI is the problem around electricity demand, but kind of they're trying to go around this electricity problem by trying to kind of resolve the problem by allowing these companies to develop new technologies like SMR, nuclear, um, and then everything else. So electri- um, electric electricity demand after more than a decade. So U.S. Energy Information Administration. So when we look at electricity demand, is continuing to normal public schedule. So here it is into 2025. So this is after the U.S. electricity consumption from 90s to 2026. So billion kilowatts. So as you can see, the demand for electricity is not slowing down. We got into the AI era around here, but AI is going to definitely increase and expedite the need. Short-term energy outlook forecast looks like they're saying is going to go up about a percent, 1.7% between. It's gone up 1.7% between 2026 and 2020 and 2026 average annual growth rate. So, in our last short-term energy outlook, uh, we forecasted U.S. annual electricity consumptions will increase between 25 and 2026, surpassing an all-time high reaching to 2024. This growth uh, contrasts with a trend of a relatively flat electricity demand between 2000s. U.S. electricity consumption was essentially flat for nearly 2 decades. U.S. electricity sale to ultimate customer. So boom, boom, boom. This here is the commercial. Obviously, commercial has been going up significantly. That's kind of interesting. Um, we're seeing that industrials also going up, and then we're seeing residential kind of going up and kind of flattening in a down direction. Residential up, expected to be about up by 0.7% average annual growth rate by 2020 and 2026. Industrial is up 2%, and then commercial is up a lot more. U.S. Energy Information. So it impacted electricity demand growth is surpassing expansion in generating capacity and electricity storage. Much of the additional capacity is from solar battery storage facilities. The new generating capacity is concentrated in Texas, California, Upper Midwest, and the Northeast. So this is U.S. electricity generation demand. So when Trump here is saying, "Oh well, the only bottleneck here is electricity demand," and AI is actually every company, every country needs it. Um, we are kind of seeing that there is a demand here for, according to the EIA, there's demand going on, and a lot of this production in California, Texas, Upper West, and Northern East is definitely going up here, as you can see. I think the biggest part going into the future is going to be this battery storage. So companies that can provide these battery storage processes. One of the company, the publicly traded right now, is called Fluence. I actually own their stock. They're called Fluence, and they have a modular type of battery storage product. So companies can buy them. They can store them in what their um, they can put them close to their AI build out, and this is what they can use to um, to keep energy flow going. I think it's going to be important because if the electricity goes down, you don't want to be dependent only on that. Uh, you want a secondary thing here that keeps energy demand going. I mean, energy flow going. You don't want your business or your AI business to go down just because a hurricane came through and took everything down. So energy storage, I think, is going to be really important going into the future. But let's continue to go on here. So in gigawatts, utility scale solar photovoltaic, so solar stuff here is definitely since 2020 or 2023 is kind of like skyrocketing here. Do we have this coal? Coal is definitely getting beat up. Um, we are seeing this like battery storage increasing. We have wind also going up, small scale solar PVs, and natural gas kind of flattening out. So from what we see in the demand in energy production is that energy capacity is solar, battery storage, wind, and small scale solar PVs, but also SMRs are playing a big role um, in in this energy demand. But also, not only that, but SMRs are becoming like one of the most important ways energy is going to be produced. You got to think about like a business that operates in the middle of the city, let's say a corporate office or something in the middle of New York. They probably might want, or maybe there's a data center they run and it's right next to the building in New York, and they want to be able to run all these AI agents, and they might need a small modular reactor close by. So, electric utility grid operated regulation and other stakeholders are also committing to energy efficiency and demand response program, according to the analysts conducted by Federal Energy Regulation Commission, and based on our spending data. In addition, all utilities are expanding network of high voltage transmission lines to maintain system balancing and to ensure reliable electricity service. So there we go. Let's keep going here. We have Jensen Huang. AI has now reached a vicious cycle. NVIDIA CEO Jensen Huang. The more you use it, because the AI is smart and we pay for it, the more profit it generates. The more profit it generates, the more computer compute puts on the grid. So this is like an interesting vicious cycle. Interesting because like I guess it's if you create an agent and the agent is making money, you're just gonna expand the business. So practically, AI is going to be a business that is going to be generating money and is going to continue expanding because people want to make money. Businesses want to make money while staying efficient. We saw that Amazon said, Amazon saying, Amazon CEO lay off and AI comment. So he said, we're laying off people because of AI. And he specifically said this. A lot of people are kind of hiding behind it, but he's one of the first ones that was able to say this. So Amazon CEO Andy Jassy has made it clear that um, the recent layoff are not driven by financial strength or AI replacing workers. Instead, the company is focused on culture cultural reset to stay nimble and efficient. So the layoffs are part of the broader strategy to reshape Amazon internal culture and adapt to the rapid technology changes. What do you think that means? That's because AI. So let's watch this a little bit and then we'll go from there.
That virtual cycle for NVIDIA has now been achieved after 30 years. We have achieved that also. 15 years later, we've achieved that for AI. AI has now reached the virtual cycle. And so the more you use it, because the AI is smart and we pay for it, the more profit is generated, the more profit generated, the more compute's put on the grid, the more compute is put into AI factories, the more compute, the AI becomes smarter, the smarter, more people use it, more applications use it, the more problems we can solve. This virtual cycle is now spinning. What we need to do is drive the cost down tremendously so that, one, the user experience is better. When you prompt the AI, it responds to you much faster. And two, so that we keep this virtual cycle going by driving its cost down so that it could get smarter, so that more people will use it, so that so on and so forth. That virtual cycle is now spinning. But how do we do that when Moore's Law has really reached this limit? Well, the answer is called co-design. You can't just design chips and hope that things on top of it is going to go faster. The best you could do in designing chips is add, I don't know, 50% more transistors every couple of years. And if you added more transistors, we can add more transistors, and TSMC's got a lot of transistor, incredible company. We'll just keep adding more transistors. However, that's all in percentages, not exponentials. We need to compound exponentials to keep this virtual cycle going. We call it extreme co-design. NVIDIA is the only company in the world today that literally starts from a blank sheet of paper and can think about new fundamental architecture, computer architecture, new chips, new systems, new software, new model architecture, and new applications all at the same time. So many of the people in this room are here because you're different parts of that layer, different parts of that stack and working with NVIDIA. We fundamentally re-architect everything from the ground up. And then, because AI is such a large problem, we scale it up. We created a whole computer, a computer for the first time that has scaled up into an entire rack. That's one computer, one GPU. And then we scale it out by inventing a new AI Ethernet technology we call Spectrum-X Ethernet. Everybody will say Ethernet's Ethernet. Ethernet's hardly Ethernet. Ethernet, Spectrum-X Ethernet, is designed for AI performance, and it's the reason why it's so successful. And even that's not big enough. We'll fill this entire room of AI supercomputers and GPUs. That's still not big enough because the number of applications and the number of users for AI is continuing to grow exponentially, and we connect multiple of these data centers together, and we call that scale across. Spectrum XGS, gigascale, Spectrum X gigascale, XGS. By doing so, we do co-design at such an enormous level, such an extreme level, that the performance benefits are shocking. Not 50% better each generation, not 25% better each generation, but much, much more. This is the most extreme co-designed computer we've ever made, and quite frankly, made in modern times. Since the IBM System 360, I don't think a computer has been ground up, reinvented like this ever. This system was incredibly hard to create. I'll show you the benefits in just a second. But essentially what we've done, we've created, otherwise, hey Janine, you can come out. You have to meet me like halfway. All right, so this is kind of like Captain America's shield. So NVLink 72, if we were to create one giant chip, one giant GPU, this is what it would look like. This is the level of wafer scale processing we would have to do. It's incredible. All of this, all of these chips are now put into one giant rack. Did I do that or did somebody else do that? Into that one giant rack. You know, sometimes I don't feel like I'm up here by myself. This one giant rack makes all of these chips work together as one.
There you go. So there he is, just talking about just AI, the demand, the continuous growth. Um, if you do have a stock that you want me to check out, totally put it in the comment sections, and I'll do quick research on it and see what I think about the company. Usually, when I start searching for companies, I start at the business, management, and then financials. Fubo. So Fubo actually, the Fubo is a company that is really, really gearing up, and it's starting to. It's a really, really exciting company here. I'm gonna drop some companies actually in here. I don't have them right now. So Fubo recently did like this. They finally finished up this like legal requirement, and now Fubo, I believe, like 70% owned by Disney. Disney and YouTube just broke up, and so YouTube is not able to stream. Users are not able to stream a lot of games, specifically like football, basketball, sports, and so because of that, a lot of those users are getting really frustrated because one of the reasons that YouTube people pay for YouTube Premium is because they have YouTube has those football sports, and so Fubo is kind of playing that role now and taking over that business, and most likely providing a lot of those games that would normally be on YouTube TV. So as you can see here, Fubo is setting up to be one of the biggest gainers of 2026. Everything is going in their favor. 5 million subscribers. Disney Resources, sixth largest pay TV, instantly profitable. YTTV missing off the subs. High demand for skinny bundles. They actually just released this thing called Skinny Bundle, which is really interesting because now, just because they're having this whole debacle between YouTube and between YouTube can't play a lot of the videos. Um, Fubo came out with this product that's like a $9.99 a month subscription, and it's called Fubo Skinny Bundle. So if we were to look up what that is pricey. It's actually a really smart strategy for them. So it's $70. Skinny bundles. Disney hopes to fatten. So I'm not. Wait. Let's go. High demand for Fubo Skinny Bundle. So Fubo Skinny Bundle are priced as following. So there is 45. I thought it was less than that. Promotional discounts. There's the $46 a month, and then there's the about $56 a month. This bundle includes over 20 sports broadcasting network providing comprehensive coverage of national and local sports events, which is pretty cool. Fubo TV package. So this is a package you can buy and just pay a monthly. So Fubo TV price per month up to 50% off. But the cool part is now, does Fubo own? I think Fubo now owns Hulu. I think does not own Hulu. Oh, Disney. Okay, so Fubo does not own Hulu. Instead, Fubo TV has merged with Walt Disney Company's Hulu Plus Live TV, creating a new entire entity that combines their services. Disney was ho- Disney will hold approximately 70% ownership of the newly formed company, while Fubo existing shareholders will have the 30%, around 30%. So this is actually kind of cool because now Disney can say, listen, users can subscribe. I mean, think of how many people subscribe to Disney Plus. A lot. And then think of the number of customers that Disney has and sports fans and everything else. So if football gets into like the whole like more than just football, gets into like movies and everything else as well, they're gonna do very well. But also if now you can get a monthly subscription between Fubo, Disney, and Hulu. This is gonna bring even way more customers. Imagine Disney starts pushing Fubo to all of its current customers. Um, how how many uh, Disney Disney Plus customers customer accounts are there? So this is 100. So Disney Plus subscriptions. So there's 124.6 million Disney Plus subscribers. So out of those, imagine if Disney starts pushing Hulu for all of them. I mean Fubo to all of them, right? Right. So that would be so good for Fubo for Fubo in the long term. So, geez, why am I feeling so tired? By the way, if you have a stock that you want me to check out, make sure you leave it in the comment section. I'll do research on it. This entire night, I'm just gonna be looking up and helping users just look at stocks. So pretty cool here, right? So I think Fubo definitely has a really good potential, really good business that they're doing here. I wanted to also show you this, that from an entertainment perspective, Fubo is number one in the App Store. So in the App Store, entertainment top chart, Fubo, watch live TV and sports, is number one. Then obviously it just beat TikTok. Like Fubo might be a company worth really looking at. It's still a really small company. It's about $3.8 billion market cap, um, which is it's not that big. Still a very small company, and partnered up with one of the best entertainment business out there, and that's Disney. So you have here Google search trends for Fubo are going through the roof. As you can see, this July 1st, 2024. Let's look at this for ourselves. Um, Google search uh, results for Fubo. I need to switch to Google, man. I need to switch to Chrome. Uh, so let's look up how this trend is looking. Fubo TV, Google search results, shorter shopping. I can't find it for some reason. Google search results for Fubo. Google search results for trends, maybe. Google search trend. Ugh, that's terrible. Trend for Fubo. So recently, search Fubo has surged significantly around October 29th, when the merger with Hulu Plus Live TV was announced and completed. The stock price moved at 250%. That did happen. Key driven merger news. So the primary driver of the recent search volume is finalized deal with Disney, which creates a major virtual pay minus TV competitor. Stock has performed well, blah 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 blah, and it doesn't show me. That's fine, but practically, it's pretty cool to see that we have the trend for Fubo is forecasted to be going up. I guess I don't see why. I think people are gonna want to see the football games. So Fubo was indeed we indeed will let this ride to 180 share lockdown. Wow, looks like he bought 40,000 shares of Fubo at $3.82. So this Anthony Invest actually does pretty good. Just DD and just stock related news here. It's a portfolio update November 2nd. I've realized I don't own a Fubo. This week I'll likely move some funds around to add more, especially with earnings tomorrow. Still DCA into Amazon every week, even after the run up. It's extremely undervalued in my eye. So this is how his holdings look so far at the top 30%, AMD about 19%, Google at 12%, Amazon at 10%, and he continues to buy over, every week. If I do want to start doing this, building out a portfolio as well, where I buy and I just hold the stock, and I just keep adding, and not, to be honest, that company might be Fubo, PayPal, or Amazon. I really want to do it only to these two because they are still undervalued. PayPal is innovating like crazy, great management. They're going to start paying dividend, so even way better. So I may end up just focusing like my weekly or monthly buys onto PayPal and make it maybe a public portfolio that people can actually see. So PayPal under 70 after strong quarter is another easy add for me. Overall, really happy with where the portfolio is at. And as always, I still hold Oscar and Lemonade. Yeah, I do not like those two businesses. I mean, I don't mind them, but just yeah, they're just too hyped up in the X world. I might be buying Fubo on Monday. Y'all have convinced me. Yeah, and I mean Fubo is really, really interesting. We're gonna play this one video here on this channel. It's about 9 minutes. Not under pilot plan commission upgrade. In this video, I read through the Aduro recent press. I don't know if I'm gonna actually see that. What I'm interested in is that media. He posted a video on what happened with Fubo, and Fubo Disney dropped 17 minutes. Merger approved. So this one right here,
Disney just pulled all their content from YouTube TV.
I think I may end up just playing this video here. So let's go ahead and watch this video, and then we will react to it afterwards. So what I'm going to do is I'm going to pop it out. I'm going to make it larger so we can see everything. Boom. I'm going to put it right here. There we go. So let's watch this. A really good overall coverage of what happened with Fubo. And once again, if you have a stock that you want me to look at, totally go ahead and drop it in the comment section.
Disney just pulled all their content from YouTube TV, and this is a major shift in the streaming landscape. In this video, I'm going to break down why this move strengthens Fubo's position in the pay TV market and why it could accelerate subscriber growth going forward. If you like this type of content, be sure to like and repost to help grow the community. If you want to consider supporting me any further, please check out my Patreon. I'll link in the thread below. I appreciate your consideration, and let's jump right into the video. But first, I want to let you guys know I am going to be live streaming the earnings call on Monday. I'll be going live at 7:30 a.m. Eastern Standard Time. It's going to be right here on X. I'm thinking about potentially doing a Twitter Spaces after the fact, but we'll just see how it goes there. On the call, I expect Gandler to light the path forward for the merger, talk about, hey, here's what we plan to do as far as growth with the new company, synergies, stuff like that. So I think it'll make it a lot clearer for analysts, help them digest everything that's going on, and potentially contribute towards a re-rating over the coming weeks and months. There is potential as well. He'll offer some commentary on the YouTube TV content situation with Disney pulling all their content off the platform, but I anticipate him to be very limited if they address it at all. We don't want any antitrust concerns popping up or anything like that. So it'll be interesting to see what he says. But yeah, see you guys at 7:30 a.m. Eastern Standard Time. It's gonna be a blast. I always love live streaming the earnings, and it's I'm excited to have you guys there. So if you've been following me all week, you'll know that I tweeted out the merger was completed on Wednesday, and if you want to go check it out, I screenshotted it right here. Just look for this video on my profile. I gave my raw thoughts on the merger and the price action of that day. And long story short, again, I'm still bullish. I'm not worried about the short-term price movements. But if you want my raw thoughts, go check that out after you finish watching this one. In that video, I did talk about how I wanted to turn my eyes towards, we had the merger completed. I said, hey, next day, potentially YouTube TV and Disney are going to have a carriage agreement that expires. So we'll be seeing if they end up coming to an agreement to keep the coverage around. But I said in the video, it's very likely that we were going to lapse coverage, and the government's not really around to stop it. So it kind of, everything made sense in my personal opinion. It seemed very calculated, and I was very confident they were going to drop it. But then at 6:15, the Hollywood Reporter came out and said that YouTube had settled a lawsuit with Disney over hiring of their longtime company executive Justin Connolly to serve in a newly created role as the global head of media and sports. So I thought, wow, like YouTube, they just settled with Disney. They're pretty serious about getting, Disney to renew their carriage agreement, and there actually may be a chance. I said we might get some movement on the Disney and YouTube TV carriage agreement after all. The settlement was absolutely part of the negotiations. So, this is, 6:15 p.m. We're talking maybe 6 hours before everything's set to expire, and I know these things always go down to the wire. So I was anticipating potentially some stuff coming up, but I was very surprised to see this, and I thought, wow, maybe, they end up getting a deal done. I waited all night, guys, so I stayed up till 12 o'clock, and, they ended up coming to fruition. It ended up, YouTube dropped all of Disney's content after they failed to reach a deal. So super excited about that, and I'm so happy to be able to report that to you guys here. And so this is a bigger loss than a lot of people are saying. So obviously I'm a huge college football fan, and this is something that I knew very clearly. Anybody that's an American football fan, this was going to be a huge issue if you're a YouTube TV subscriber. But just to really paint the picture for you guys here, so I'm recording this on Friday right now. So you're missing already on Friday UNC at Syracuse and Memphis at Rice. So that's 2 football games, and you're losing major networks. So you're losing ESPN, ABC, and SEC networks. So any college football fans, you're going to miss a ton of games. You can see on Saturday, 18 college football games, 12 of them are going to be ranked teams. 3 games are going to have both ranked teams in them. So this is just a massive amount of college football content that you're now no longer going to have access to being a YouTube TV subscriber. And then on Monday, you also lose access to Monday Night Football, which is the Cardinals at the Cowboys. So any American football fan, this is absolutely devastating to you. It was very obvious to me that this was going to be a huge issue. And we're going to look at some reactions here in a second, but people are not taking it well. It's a major deal. It's actually going very viral. So following all this, I said this is an absolute masterstroke by Disney. They were able to, on Wednesday, close the Fubo deal. And then the day after they closed the Fubo deal, they're able to force YouTube TV to settle the lawsuit we just talked about over stealing their top executive. And then they end off the night by still yanking all of the Disney programming off the YouTube TV platform. Chef's kiss. So super coordinated. I'm still in awe. It's this, business is cutthroat, but this was one of the craziest things to follow and witness in real time. And all I got to say is hats off to Bob Iger, everybody over at Disney. Hats off to Fubo as well. You guys just did an amazing job, beautifully coordinated, and you're going to reap the rewards of this for sure. Hopefully we don't get any antitrust concerns. I'm sure people will be looking into it. But on top of all that, shortly after, the carriage agreements expire, we get an article coming out at midnight from Cord Cutters, so that was also clearly coordinated. So shout out to you, Cord Cutters. I think you follow the channel, so shout out to you. On top of Disney pulling all their content from YouTube TV, simultaneously, Fubo is expanding the skinny bundle availability, and they're starting to bolster their offerings. Candler is absolutely playing to win here, and I love it. This is definitely a CEO and a company you can trust your capital with. I can't wait for Monday. So just well done, and absolutely love to see we continue to expand on our offering. We're striking while the iron's hot, so if any of you guys waited this long for the merger to go through, it was, 2.5, 3/4 of just silence, but all of a sudden everything happens at once. Everyone was planning it, and it's absolutely beautiful. And again, this is the best case scenario for fundamentals. I can't think of, maybe comment down below if you can think of anything better from a scenario perspective, but this is to a T. You can't write this out and describe it any better. This is the best case scenario. Just so you guys know, I already talked about it in my raw thoughts video. I'm not selling a single share yet. I want to see, the guidance on the earnings call we have on Monday with Fubo, and then Disney reports on November 13th, so 10 days after that. So, we'll see some insights that we can, glean from them. Hopefully they give some more color on their whole situation too. But I won't be selling it all. Obviously the price hasn't reacted like a lot of people thought. I know a lot of people were playing call options, and, we're kind of short-term trading this thing even from a shares perspective. So you got to really know what you own, but this is definitely not, this is the best case scenario from fundamentals. I'm completely at peace with it, and I've never felt more confident in Fubo as a company. They're positioning themselves to be a streaming powerhouse, and they're definitely coming for the number one pay TV spot in, virtual MVPD pay TV. So absolutely beautiful. I'll just hammer it home. You guys really have to know what you own and really, truly internalize it. You are an owner of a company. You have access to all the earnings from that company by being a co-owner of it. You have now the entire Fubo business, which includes Fubo Sports, the skinny bundle service that they sued Venue over way back when. This is going to be a major beast growth line driver, in my personal opinion, long term. I think we get updates, very consistently over the course of the next coming quarters. That's going to be a line to watch for sure. And on top of all that, we now, again, own Hulu plus live TV. So we're the sixth largest vMVPD on the market. It's only going to get bigger. Disney's absolutely going to prop up new company, which is both of these services, to make sure that they get the growth that they're looking for. So you're owning a very important company. It's immediately cash flow positive. Absolutely beautiful situation. And just because the stock price isn't reacting the way you think it should react, it's definitely not reacting to the fundamental developments that just occurred. But this has been an absolutely beautiful scenario from a fundamental standpoint. You could not be sitting any better as a Fubo shareholder, besides maybe the share price increasing a little bit faster. So absolutely love it. And if you guys didn't think this was a big deal, again, I already told you we're going to look at some tweets right now and some metrics, but this is one of the most viral things. You can see right here, this had 1 million impressions, 1.1 million impressions. This guy says, you have until 6 a.m. to fix this, or we make January 6th look like a pizza party. He's tweeting YouTube TV saying they want their content back. So huge amount of impressions, and then I'll just read a few more for you here. So Parker Fleming is saying, I'm over it, sick of doing this every year. I'm now taking recommendations for competing services to watch college football. So I actually ended up diving into the comments here. I said, Fubo is the most comprehensive college football TV service. Highly recommend checking it out. I've been a customer for 2 years, which is true. I'm not lying there. And then I ended up so Caleb replied to me. He said, can you do a quad box on Fubo? I said, yes, sir. Use it every Sunday. And I linked to a tweet, from August 23rd, where I was testing out Multiview for the first time this season of football. Working very smooth. He said, awesome, appreciate it. So I'm doing my part, guys. You got to get in the comments, sell the service, bolster the new company. I'm seeing a ton of you guys do that as well. This might seem like a joke, but seriously, these little things, it really just helps the overall zeitgeist and allows people to be aware of not only Fubo, but Hulu Live TV, giving people all these different options to jump different streamers. There's going to be a ton of migration over this weekend and next weekend, and I'll talk about how long I think this is going to go on for, but the more you can do this,
We got the gist there of what's going on with Fubo, so I'm not gonna keep playing the full video. It's a whole 9-minute video. If you want to watch it, I can send a link to it. However, Fubo seems like a company that really is growing, making moves, and being very aggressive. So there you go. If there's a company that you want to start looking at, start looking with Fubo. If there's a company that you want me to look into, go ahead and leave it in the comment section, and I will do my own little due diligence there. The energy demand is skyrocketing. That is very true. Upside estimated looks like by 2030 up by 9%. Energy demand by 2027 5.5%, and currently we're at 3.5%. So I think more than just energy demand, I think energy storage is actually going to be a really important play. There's a company that I've covered. Their name is Fluence. Fluence, FLNC. This is the ticker symbol. They are a energy storage company. Um, there's 18 analysts saying that cover the company. They're saying it's fairly priced right now, a little bit over. They're saying it's about 53% above what the average analyst is saying the price should be at. Here's the analyst coverage. As you can see, there's some sells, strong sells, and most analysts are saying, you know what, hold. Um, with AI being a big event, I don't think we're going anywhere. I think energy demand is going to continue. Iron is also another good play in energy. Iron, data center storage. I think that's what it is. Um, Overview. So, Iron Limited operates in a vertically integrated data center business in Australia, Canada. The company owns and operates computing hardware as well as electricity infrastructure data center. It also mines Bitcoin, but they're not focused on Bitcoin, mainly focused on the data center energy electricity infrastructure. So this is also another play. They are actually expanding significantly. They have data centers all over the United States, as well as they are continuing to build out even more and more. They've already have partnerships with NVIDIA to buy their NVIDIA GPUs, and the goal is to continue expanding this business by buying property and turning it into a data center play. So which is pretty cool. Um, yeah, so I'm not gonna go over the whole thing. Trusted delivery partners. So our in-house team of experts in supporting by trusted delivery partners, giving you access to innovation. SMCI, obviously, NVIDIA, Reka, Dell. Pretty good company here. I think they're still, pretty small, $16.64 billion company, but they may probably are going to continue to expand their business. This stock almost went to $70, and yep, 69.56, and then it just dropped from all time highs. I do like iron as a business. Breaking: Carlos Menzel, mayor of Mexico, has been assassinated by what? Oh my gosh. Carlos Manos, mayor of European Mexico, has been assassinated by cartel after pleading with presidential President Claudia Sheinbaum to intervene in city's cartel violation. Oh my gosh, that's insane. Same lady who saw 37 of her opponents passed away. Wow. I have a feeling the US is gonna do something here. They're gonna intervene somewhere. The only two companies I owe I own report on the same day. Fubo and Palantir. Fubo, we're going to change the name to Hululu, then everyone will want some. The Yep. So after Q3, I updated my DCF on PayPal. This doesn't account for any buyback, so I would argue that the intrinsic value a little bit better than it's around $140 a share. So at a tax rate of 21, long-term growth rate of 3%, revenue CAGR at 6%, working average cost of capital of about 9%, share price $69, shares outstanding 935. Your year count, year 1, 2, 3, 4, 5 at a revenue growth of the revenue, free cash flow margin, free cash flow. So it looks like discount factor 90, 80, 70, 70, and 65. He is saying that the share price of the company should be at least 125 $125 a share, and he's not counting in the shares that are actually being removed from the market by PayPal. The cool part about PayPal, one of the reasons I like them is they've already decided they're gonna start paying dividend. So that's gonna really make them such a great company, because once they start paying dividend, I think there's even going to be different level of demand for the company. So present value of free cash flow, year 1, 4, 5, okay, 4.9, 4.8, 5.3, 5.4, 5.5, and 5.4 a year 5. Terminal value, the current value of future monies is they're saying about 142,000. Okay, so I mean, this looks market capitalization $64 billion, intrinsic value premium to market capitalization of 53 with 82%. So, well, if you like PayPal, this is a decent overview. I think I am in this group. Yep, I am following this group. And this group, they just post everything around PayPal. So if you're interested in PayPal, definitely what I normally do is when I find a company that I like, I will join a group like this, PayPal investors. I will see what they're talking about. If the community is talking about the right numbers, or they just like all over the place, all about hype, then I would just leave it. But this PayPal group is pretty good. But yeah, if you have a stock, make sure you leave in the comment section. I'll definitely do a review of the stock. XGIA chief president for calling Hunter laptop Russian misinformation. Not interesting. So this is cool. This bright line I've taken it goes from Orlando to Miami. It's like $85. Pretty cool deal. College student get a student loan just to take a shot at 10xing it in the stock market. Oh my gosh. He says he will be unemployed anyways, so might as well take the risk. The system is more cooked than ever. That's crazy. Just took out 50K student loan to exit, 10 exit. So all right, I'm financing. I'm a finance major sitting in my 8 a.m. economics class, realizing that this is all kind of messed up scam. My professor, who has PhD, makes 85K a year, while my friend who dropped out to today trading makes a month. So I did what any rational person would do, took out the rest of my student loan, 50K, and deposited it into my brokerage account. My thesis is simple. J-POW will cut rates, and my student loans payment starts in 6 months anyways. Either I'm retiring before graduation, or I'll be bankrupt from debt no matter what. Current position 450x by out the money 515 call because technical analysis told me the line it has to go up eventually. My professor said this is statistically guaranteed to fail. Pray for me. That is insane. Would you do that? Would you take student loans to go long on a stock? And sometimes, like people, this is actually a normal practice. People do actually take out loan, and they use that money to trade in the stock market, make money. While on the side, maybe what they'll do is they'll take out $50,000, and then they know that's 3% rate, and then they have to pay, interest and principal, at 3%, even 4%, and then they'll leave like $10,000 on the side to pay off the debt monthly, and then they'll take $40,000, and then with the 40 they will invest across different stocks, and then when one of the stock hits, they'll take that money out and put it in the savings to pay off the rest of the debt. It's an actual business strategy that a lot of people do kind of use, but I don't. It is risky because what happens, like the chances, the chances of you doing hitting the best market and turn 50K into 100K, it is possible, but would you do it? Would you take out student loan at about $50,000 and invest it into the stock market? Because at the end of the day, the student loan is the kind of loan that literally doesn't drop off from you. Like, you have to pay for it. They're gonna come for you now or later. Um, so this is actually an actual strategy some people use. Student loans sometimes have a better rate when and so versus going out and getting like a personal loan. So this is a strategy some people use, is just take out student loans and go from there, and then invest that money into the stock market, which I think is definitely not the best way to go about things. If you have a stock that you want me to check out, make sure you go ahead and leave in the comment section, and I will do a review of that stock. So we may just end up continue doing our research that we were doing yesterday, unless you have a stock that you want me to review. Yesterday I went through 20 stocks, and I've ended up finding the most interesting ones out of the 20. These were stocks in the United States that IPO in the last 5 years, and that were under $40, and in the tech industry. So these were some of the ones that I found. Here's this company here, AI at a glance. So this is a company, obviously an AI data analysis company. Physical intelligence for a wide array of robotics form factor. So the practically AI drone training and warehouse infrastructure, and from warehouse infrastructure like robotics, kind of taking the data, making it actually work for companies versus having the data and not knowing what to do with that information. So that is kind of data prediction, data AI training. So that's practically what they focus on. This company here, they are it says Giga Cloud. Their business to business is pioneering a global business to business marketplace for large parcel merchandise. So here's in essence what they do as a business. So they have there's a seller, there's a supplier that has a whole bunch of certain product, and let's say before them there's a manufacturer that makes a whole bunch of products. So this company does like a bulk purchase from the manufacturer, and then you have the platform, which is this company here, Giga B2B.com. They will plug their technology, and companies will plug into them. So global fulfillment networks will plug into that company's data. So it shows what they have, the type of suppliers, and the type of products that the sellers are willing to sell. And then the global fulfillment network will work with the customers straight to consumer. So you can go shopping on your phone and buy it, and now one product comes to your house, or to the marketplace, like retail stores, retail stores, or resellers, or brick and mortar stores. So that's how this company kind of makes their money, is kind of getting the products that customers need in a more wholesale perspective. Pretty interesting company. I mean, it seems like Alibaba to me. You got Exodus, more of a crypto company. You have this company here, more of like an ad-based company. So they are TV ads. If you are an entrepreneur, you have a business that you want to market on TV, but you don't know how the whole process works, so you can use this to do that. The next company is this. This company is more like a data center. They're a lot like Iron. Small company, but they are a lot like Iron. They are trying to get in the AI, in the world of AI. So they have the maximum performance GPUs, they have high trusted clusters, and they will allow companies to rent storage from them. And then you got this company here, which is Backblaze. They were kind of interesting just because of their data resiliency business. I think in cybersecurity, I think this cybersecurity sometimes I say is more important than AI. If you don't have security, then your AI product is going to be crushed by your competition in other countries. So these are the 5 that and I ended up concluding with. But let's continue doing the rest of the companies the rest of the page that we were looking at yesterday. Let's see if it's gonna come up. Okay, there we go. So we were looking at companies that are small cap, and that are, let me see if I still have it. So we were looking at small cap companies, which are 250 million to about $2 billion market cap. They're within the United States. They are in the tech sector, under $40, and they IPO'd in the last 5 years. So that's the criteria here to researching and finding the best stock. And so yesterday we filtered out and we did page 1. Today we're just going to finish up with page 2 to see if there is any other company that's actually worth looking at. So we'll do these 14, and then we will conclude the small cap research. Boom. So we'll start here and go down. Obviously, just like yesterday, we're not going to spend much time. We're going to do a quick review of what they're trying to sell and everything else, and we'll go from there. So this company obviously, IPO'd in probably 2025. They IPO'd more than $70 a share, and then they dumped to $3, and now they try to come back here. They hit this resistance of 26, and they're back down to about $9, $8.88. $8.88 as of Friday. Oh, actually, let's go check out the after hours. So the market is open. Can we see after hours here? Stock market screener, market movers, market newsletter, trending. Let's see if I can find the after hour moves here. Or overnight even. Watch list, market movers, screener. Stock exchange, company to engineer, by industry, stock list, top analyst, top stocks. I don't know where they keep the not the trends, but I wanted to go home maybe. Market news, recent IPOs. Mm, so U.S. stock futures inch higher as Wall Street looks are okay. The case against quarterly report by public companies. Yeah. So part one. Yeah. No, I don't like that. The Trump recently reported was saying that he actually doesn't want. He wants companies to report every 6 months rather than every quarter, which I really don't like at all. November 2nd, futures. So futures, as you can see, are green. Like the entire market is green. Um, October 31st. After hours, 7.8, 7.85 million shares. All right. So US stock index futures gained on Sunday after major equity benchmark extended their monthly winning stake streak in October. So it looks like Dow Jones Industry Average futures is up 0.26 basis points. Um, okay, Sunday, and the Bitcoin is definitely down. Continue. Oh man, you gotta subscribe to it. Nvidia is the biggest winner from earnings season, and it hasn't even reported yet. mm, yeah, stock futures, US. I'm trying to find futures, but it's almost impossible. Investing, world market, financial industrials. Boom. Hopefully, this will bring up the futures. Search result, either futures, young. Recent symbols. All right, not helpful at all. Stock market futures. Not pre-market. All right, let's see what's going on. I'll get back into this. I just wanted to catch us up on futures, sentiment, and everything else. Where we at? The Dow futures, S&P futures, and Nasdaq futures are looking good. So we're 188 points there on the Dow futures. S&P 500 futures looking 23. Nasdaq futures at 109. Implied open 148, 29, and 129. So pre-market, yes. So this is looking actually looking really good. So futures are looking green. This is world market. America definitely is in the green here. China in the Chinese market is down. I think we've had really amazing news, so that's why most likely the futures are green. All right, let me not get carried away here. I'll keep it open though, but then I'll continue researching some of these stocks that IPO'd this year. If you have a stock that you want me to check out, totally just drop it in the comment section. So we got a company here, Vane Technologies. Rain Technology is an advertising technology company which develops and manages enterprise software platform. Nope, already not interested. Blend Lab. Blend Lab. Interesting. What does this company do? They IPO'd not long ago. Obviously, this year they IPO'd up over $20 here. As you can see, they IPO'd about $21. They dropped down to 85 cents, sitting at $3.31 as of Friday. What the heck does this company? So Blend Labs is a what? Blend Labs, a digital organization platform serving banks, credit unions, and mortgage lenders. It operates through the Blend platform and title segment. The Blend platform segment consists of suites of products that power the entire organization process from back-end workflow to consumer experience. The title segment includes a suite of title products that serve, such as instant title and other title search options, insurance solutions, closing and settlement services, including mobile sign and e-signature capabilities, and various post-closing solutions. The company is run by these individuals here and headquartered in California. Okay, the company makes a little money, they gross profit, they are good here. Operating income, they're losing money. That's okay, but how's net income before tax? They lost some money 2023. They lost less money here. Trailing 12 months is looking even better. In May, we saw 99.57 per insider buy. In May of this year, there was a huge amount of insider buy. 2025, March, April, May at $3. Okay, there's a lot of insider sales as well, but not quite as big. August, there's a combination of both. Director was able to buy shares. Nice. This director is very bullish on the company. All right, so let's check out the company's site. Seem interesting here. Title company, digital organization solution that puts ROI on repeat. Congratulations, but you're now pre-approved. I mean, why would somebody use this versus like a SoFi or Upstart? Partner with teams that work with. Okay, those just words. Win more customers, boost deposit conversion rates by 50%. Say goodbye to clunky, disconnected onboarding journey. Automated workflow to save 16 hours per loan. Grown loan volume by 33% while keeping your team lean. All right, so this is practically like efficiency in a way. Probably through the usage of AI or some type of service like that. So overview video, product demo, company metrics. So they are at about Q2 2025, they're at 31.5 million in revenue. Data gross profit non-GAAP of 24 million, and then non-operating income 4.7 million in Q2. Press release, I kind of want to see I want to see the presentation. Just get just a quick understanding of what the company does here. Blend Labs. So number one, fourth consecutive quarter of non-GAAP operating profit with 15% non-GAAP operating margin. Revenue 31.5 million ahead of the midpoint of our guidance, 10% year over year. Record remaining performance obligation 190 million, fueled by the 50 million renewal and expansion. So this type of company would be like like on subscription, so a customer will probably subscribe to them and then go from there. Consumer banking suite revenue reached about 43% year over year. So consumer bank suite revenue. So Q2 2024, Q3, Q4, and then up to Q2 of, so they were a year over year. They went from 8 to 11. They were flat Q3 through Q1 of Q3 24, and then Q1 of 25. They were kind of flat. Q2 they saw some business. I think as we see rates coming down, we're gonna see this company grow. I think they're gonna grow a lot more. Okay, mortgage suite revenue versus consumer bank revenue. So these are the two ways that they make money. Okay, so we saw this mortgage suite revenue kind of go down. Q2 went up. I think we're gonna probably see this up again, just because of the type of economy that we are in. Mortgage suite economic volume per funded loan. So focus on the efficiency of the business with high margin add-on product ecosystem partnership. Core software making about 65 in millions, 65,000. I think that's millions. That's their core business. We saw a decline here, Q4 24, Q2 or 25. This small partnerships, this small segment is not really that big, but it's starting to become, a significant portion of their company. And then add-on products, looks like, that kind of grew up to 14, but then the last quarters, it's just been going down like it was nothing. So gross margin saw a healthy growth compared to the prior year. So total blend, non-GAAP gross margins, and then here we have the software platform. These are their expenses rationalization, so significantly reduced non-GAAP operating expense year over year. So this is Q2 24. Research and development has gone down. I guess they were spending a ton of money right here, $10 million. Non-amounts are presented, continuing operation. Here, sales and marketing, and then general administration. So here, general administration is within that $6 to $7 million. There are sales and marketing. They're spending a lot of money to get their, to get themselves out there, known by the industry. Common shares, outstanding Class A common stock outstanding here, and then Class B common stock outstanding. Okay, so they kept this consistent, and as well as this consistent, and nothing changed in total common stock. It looks like we have some change in the outstanding stock options. As the price goes up, the stock options increase here. So how the heck did they make money? This is the worst presentation ever. I'm not liking the company just because of their presentation, so I'm out. Sprinkler Inc. Huh? What does this company do? So they went IPO, and what do they do? Jink probably went down. Like everything else. This is why you never buy a company at IPO. Okay. Sprinkler is engaged in provision of enterprise cloud software product. It enables organizations to do marketing, advertising, research, care sales, and organization across modern channels, including social messaging, chats. Okay, text. Okay, nope. Definitely not interested in this company. Screen is part of my makeup. create a personalized ad. Okay, so the definitive AI native platform for extraordinary customer experience, unify customer journey, and empower customer facing teams by breaking down. All right, get out of here. Get out of here. That does not sound interesting at all. It looks like this company had a, went from $4, and then they out of nowhere just exploded here, sitting at the 780. It's called the Vimeo. Okay, the video company. Vimeo Inc. engages in the provision of online video software and services. It also offers professional software tools and technology for creators, business to host, distribute, and monetize their video anywhere. Its products include video player, video hosting, video editor, video marketing, computer and live streaming. Vimeo venues, webinar, live. I think I've heard of this. Okay, yeah. Okay, I did not know this company was public. So it's like some kind of YouTube competitor here. They allow you to edit, translate to different languages. Their website is so messy that it's just annoying. So they got products. So they have a video player, video hosting, video editor, video making, recording, live streaming, webinars, video library, Vimeo AI, video collaboration, video analytics, integrated hub features. They have mobile app, teleprompter, video transcription, audio capture, video trimmer, blah blah blah. Okay, for enterprise, small businesses. I don't know how big this company is. Investor relations. I know that they have a pretty interesting business, but Vimeo is the world's most innovative video experience platform. We enable anyone to create a high quality video experience to better connect and bring ideas to life. We proudly serve our community of millions of users, from creative storyteller to global distributor teams at the world's largest companies. Okay. I've used their site before, but I think they're becoming irrelevant. Like I barely see their stuff, so I'm not interested. They've been around for quite a while. $11 stock that a closing as of Friday, and then overall they IPO'd about $41. Looks like the company is dying off. It's called Double Verify Holdings, so probably cybersecurity. As it engages in developing a software platform for digital media measurement, data analytics. It's a software. Its software is integrated across entire digital advertising ecosystem, including programmatic platforms, social media channels, and digital publishers. The company was founded in 2017 and located in New York. Company, decent revenues here. Geez, it takes a lot of money for them to operate. Hitting decent gross profits, not growing that fast. Trailing 12 months look decent. Income tax, then net income 71. I'm really not interested. All I want to see from a small company is growing. Growing kind of fast, so not too interested in this one. Double Verify Holdings, so software company here. We help brands succeed. DV provides industry-leading media effectiveness platform, utilizing trusted measurement data, dynamics, AI optimization, DV maximizing campaign effectiveness, and driving tangible business outcomes for advertisers wherever they run their digital media. superior data, dynamic activation, and tangible outcomes. Okay, so brand and agencies, marketplace and publishers, social media, streaming, and commercial media. And I'm sure they have some to do with AI as well, which is every single company. So it's no longer a flex to have AI. So DoubleVerify provides industry-leading media effectiveness platform. Is your advertisement going as well as we thought? We build trust and transparency across the digital ad ecosystem. In 2025, they acquired Rockerbox, added outcome measurement and attribution capability to its suite of performance, launched a new accelerator. DVA established the new News Accelerator initiative to further align DV's product innovation with the need of the new industry. And they also acquire Cibids, extending its leadership in independent AI-powered campaign optimization, and then extended social partnerships, expanded its partnership with TikTok to provide post-campaign brand suitability measurements, making an impact. DV is driving. So it's just an ad company. Is your ad doing as well as you think? This is kind of interesting. Everybody here looks a little sketchy. Investor relations. Cute. SVP Investor Relations. She's cute. Chief Human Resource. The hell, yeah, you guys have human resource. Okay. Next company here is called Pubmatic Inc. Okay. They sell alcohol online. The company IPO'd at over $80. So Pubmatic engages in provision of specialized cloud infrastructure platform advertising. I'm tired of all these advertising companies. Can we just have a regular company in the technology sector that is not doing advertising? We're about to jump into cybersecurity if this keeps going on. Smrush Holding. Okay, I think this is going to be a no already. It engages in the provision of an online visibility management software service platform. Another marketing company. $17 share. I think this probably looks like a company that held up. Yep. Wow. $6. IPO'd at over 37. Dropped all the way down to about $4. Sitting at 17. This seems an actual company. Skywire Technology, as a holding company, engages in provision of semiconductor development, manufacturing service, and packaging service. The company was founded 2016, headquartered in Bloomington. Interesting. Okay, so let's check out what they do. This is actually the first company that is kind of interesting. We streamline the concept to production journey. So, okay, bring your idea to life, commercialize new ideas, take courage. Okay, technologies. We enable innovators with diverse technology sectors or categories. So they have mixed signal, CMOS, rad hard, MEMS, superconducting, photonic, heterogeneous integration. Markets. Skywire partners with fabless companies, IDM, OEMs to bring solutions to market for a wide range of applications, aerospace and defense, automotive, consumer, healthcare, and industrials. Connect with us on LinkedIn. Okay, so are they like a testing company that does? Okay, press release events. So let's go look at the investor relations. Who we are, leadership, partner certification, suppliers, press release events, superconducting, industrials. So they seem a lot like testing company. Press release events, market, technology, services. I'm interested in the leadership. Let's look at the leadership. Okay, this could be interesting. All right. CEO and Director Thomas. CEO, under his leadership, has driven the company transformation. Okay. BS in chemical engineering. President and COO. Technology as a service. His experience includes 25 years in various executive leaderships. He's holds a Bachelor of Science degree in electrical engineering. The CFO, Chief Financial Officer. Prior to joining the company, he is Managing Director, led the Financial Advisory Services, Minneapolis. Holds a Master's in Business Administration, University of Akron, Bachelor's of Arts. Okay. Okay, the leadership doesn't seem like anything significant here. Press release. I'm kind of interested to find the company's investor relations page. Investor relations. Let's look them up here. Skywater. So let's skip to how the heck the company makes money. So Skywater Technology, together with its subsidiaries, operates a pure play technology foundry that offers semiconductor development, manufacturing, packaging services in the United States. The company offers engineering process development support service to co-create technologies with customers for various microelectronics and related macro and nanotechnologies applications, semiconductors and manufacturing services for various silicon-based analog and mixed. Okay, so they're trying to be like a TSM in a way. So they just have a whole bunch of, obviously that's where we see the services that they provide here. Now they make sense. So the services that they have is technology services, tasks, technology and design enablement, and manufacturing. So they work with other companies to develop what those companies need. The company did get beat up since they IPO'd. They IPO'd and the stock price just took off, but then it dumped, and we saw that this $5 support for some time now, since 2022. And then we went right here. There was this March, the $7, and then since then we haven't seen anything but up for the company. In 5 years, up 24. Year, they're up 66%, and then for the month they're down 6%, and for the 5 days they're up 1%. But overall, this company seems to be have multiple product lines, multiple ways to make money, which is a positive thing to see. They have they IPO date 2021. They have 702 employees. Okay, let me plug this company into my AI stock company research. Where did I put it. All right, I'll put it into my AI researcher while we continue doing a little bit more research on the company. Almost $1 billion market cap for this company here. Very volatile, obviously. The stock has gone from what, $30, over $30 to $17. Forecast, there are 4 analysts saying that it's a strong buy. The number of analysts is growing. 3 analysts saying strong buy, and 1 analyst saying just a buy. No analyst saying it's a whole sell, a strong sell. So from an analyst perspective, it seems like a decent company. If you do have a stock you want me to research, leave it in the comment section. I'll check them out. So there you go. So there are 4 analysts that cover Skywire Technology stock, have consensus rating of strong buy, an average price of $15. So it is above the average price of what analysts are saying. So overpriced by about 10%. So the next 12 month, analysts are saying, it could be at 25, 15, or $11. So the analysts are needing him. I mean, to be honest, there's only like literally analysts from the same firms. So this can, maybe it's not even fair to just look at these analysts. Now let's go look at the financials. Let's look at their short-term performance, looking at their quarterly. So when we're looking at small companies, we really want, the biggest thing we want to see is this revenue growth. So this is actually really good to see. So they IPO'd in 21, and then since they IPO'd, you see this growth rate is in the 30s to 40%, 20%, 33%, which is good to see. But going into the recent time, they have really slowed down significantly, which is definitely not, what you want to see, this slowdown. Why the slowdown? I don't know, but I am seeing that slowdown, which is not good. Quarterly numbers, gross profit. So this company does hit gross profit. It looks like in 21, they started positive, then went negative, and then they're holding this about 16, 2017. So decent gross profits. Selling general administration, pretty consistent, growing a little bit with revenue. Research development, I can see them spending a lot of money. Operating expense, in total, about they started around 6 million, 20. Now they're in 2023, they're at 20 million, and then they've reduced those operating expenses. That gave them a decent operating income. This company used to be consistently losing about, in the tens of millions of dollars in the operating income. But 2023 they started doing much better, and then quarterly they started doing much better. They're actually to where they're making positive operating income. Q1 they hit negative operating income. Q2 they also hit negative operating income. So this is not good to see. While they hit positive numbers here on top of losing some money up here on the top line. So there's something going on either in the number of customers or in their services. They are issuing shares. So they're issuing significant amount of shares here. 2 million, 3 million, 39 million, 40 million, 48 shares outstanding. So diluted 48 million shares. So they consistently are issuing shares. Small companies always expected. I have a feeling they have a lot of short-term debt, long-term debt, but let's see. So here is the company's. Let's look at this annualized debt numbers. So this is their debt 2020. I'm sorry, current assets. These are the current liabilities. Yeah. No, I had a feeling. So they overall started having more debt than liabilities, but then here there are more assets than liabilities, current liabilities. So they're about almost 1-to-1. Total assets, um, 300 million. Liabilities, so decent. Their long-term liabilities doesn't really change much. The long-term assets also kind of consistent, but overall growing. And their total liability is just kind of all over the place, as you can see. But we're seeing it kind of in up to the right trajectory. And here's their total assets as well, up and to the right trajectory, but not moving very fast at all. Interesting company. What I'll do is I'll leave this in the watch list, so I'll put it at the bottom. So, Skywater, and Arteris. What does this company do? Let's find out. We need to go faster on this research. This company here engages in provision of interconnected and other intellectual property technology. Its products include non-coherent NOC IP, coherent non-IP So engages in provision of interconnected and other intellectual property technology. What? Okay, let's look into them a little bit more. So technology-related IP. Arteris accelerates silicon innovation with expanded multi-die solution. FlexGen, smart NOC IP revolutionized semiconductor design. System IP to connect and display today's complex SoC. Non-coherent NOC IP, last level cache IP, package IP into IP files, enabling documentation using XML, metadata for multiple purpose usage, facilitating integration and configuration, SoC assembly with efficient handling of all aspects of system integrating to make the design process easier. What do you guys do in simple terms? So AMD is driving innovation that scales AI from cloud to client by continually developing leadership computing technology and best-in-class IP, integrating Arsenal FlexGen NOC IP technology into a range of AMD chips. We can automate interconnected configuration, enable seamless connectivity among SoC components while strengthening the best end-to-end AI computer portfolio industry. So automotive industry, a solution for every smart electronic development system. So they said automotive industry, commercial, communications, consumer electronic, enterprise computing, and industrial. So industrial, Internet of Things demand for durability and safety. We optimize SoC design for performance, power, efficiency, and safety. Data centers are evolving with customized hardware optimization. We offer tailored interconnected solution for AI and storage, optimizing performance and power. Our product includes Flex NOC care to needs of key client like Samsung and AMD. Accelerating SoC connectivity with, alright, this is actually super complex. I have no idea what the heck this company does. So what I'm gonna have to do is try to understand in simple terms, what does this company do? Geez, the phrase system IP In simple terms, they need to. So here's how they help. They Ar- Arteris helps chip makers build smarter, faster, and more efficient computer chips. So they're like, okay, got it. So modern chip used for phones or cars AI are made up of many tiny parts called IP block. The company Artres provides road system inside the chips called network on chip NOCs that let these parts talk to each other quickly and reliably. They also offer a software tool that helps engineers put all the pieces together faster and easier. If a chip in a, if a if a chip in a city design the highway, traffic rules, and planning tools that make sure everything runs smoothly. Big technology companies like AMD, Samsung, Mobility uses Arteris to speed up chip development and improve performance. Interesting. This is actually really interesting company. Modern chip. ARTRIS. Let me put them on my watch list because this is actually an interesting company here. AIP. Boom. And let me put them in my NanoCap list. Let's do. So as you can see here, go in simple terms, they help companies develop chips. They remind me of a company here called NanoCap. It's called Cohere or something like that. Let me find them here. Not Marvel. Here. AEHR. This company seems like AEHR Test Systems. The other one does the testing. Maybe this is similar. This one does the actual development. So Arteris and Hirens both serve the semiconductor industry, but they operate in a very different segment. Focuses on chip design and integration, while Arteris in chip testing and reliability. Cool. Interesting. So core business provides system IP, especially in the network on chip. Interesting. Helps chip maker design complex systems. AMD, Samsung, Mobile, Beidou, Cohere, Bosch, and others. Wow, this company is actually pretty impressive here. $500 million. Value proposed speed up chip development, improve performance, reduce power consumption, and simplify back end time cost. Then I hear so chip testing and burn-in. So core business builds, tests, and burns in equipment for semiconductors, especially silicon carbide high performance ICs. Function ensures the chips are reliable and defect free before deployment. Critical for automotives, AI, and industrial applications. Often serve fabs and OEMs needing high throughput wafer level testing. Okay, so industry roles: chip design and integration, chip testing and reliability, core products, NOC IP, NOC integration software. It's called network. NOC is the network on chip. I think this company is another one where I'm adding to the list of watch list. So we found two decent companies so far. This company seems like it has some of the best customers, the biggest companies out there. The forecast analysts are saying, you know what, this company is still underpriced. analysts. There used to be 25 analysts. Now there's only 3 analysts. Wow, no, my bad. There's always been 3 total analysts, but all analysts are saying this companies that are strong buy. Um, the company's about $500 million, still like really small cap, but within that small cap, revenue about 63. So let's look at the financials. How does that look? So let's look at the annualized numbers. They grew at 33% here in 22, and then kind of slowed down here. Trailing 12 month, it's looking pretty good here. Cost of revenue, not too crazy. Gross profit looks pretty impressive. Wow. Selling general administration expenses. So the biggest expense here is we're seeing that operating expense. Most companies have that. Just small companies have just larger operating expense. They are starting to lose. So they lost a lot of money from. They barely lost anything here in December 2020. And then by 2023, they hit the peak loss of about 35 million and slowly improving their losses year over year. So losing less and less money from 2022. Operating income. Pre-tax income, net income, 3 million. So this company is kind of improving their net income loss. So they're losing less money. So which is good to see. They're issuing shares. So started at 18, now they're at 41 million shares. So most small companies pay using stocks as well. So we got the short-term assets and short-term liability. So here it looks like it's 1-to-1, but overall it looks like they got more current assets versus current liabilities. Total assets, I think it's going to be more than total liabilities, but let's see. So total liabilities here looks like pretty close, right? It's been kind of consistent, not really growing too fast. Since 2023, kind of growing in their long-term assets, trailing 12 months, it's also looking good. Total current assets are current liabilities. Sorry, we need to look at long-term liabilities. Total liabilities is also growing. Okay, interesting company. I am adding them to the list. It'd be so. By the way, this company IPO'd anywhere I think within the last 5 years. It'd be interesting to look at the company's resources, leadership. So about the company leadership, let's see who is leading the company. Okay, chairman, president, chief executive officer, chief legal officer, EV, and chief human resource. Sales chief customer. We got board of directors. Okay. Maybe we can have. Okay. Okay. Can you on this page, can you give me give me quick facts about each person's work experience. So it would be good to know. Obviously, we see all these individuals, but we want to see like where have they worked. So let Arthur since early growth stage, background, executive leadership, semiconductor startups. Okay. Extensive legal experience. Extensive legal experience in compliance. Deep HR leadership experience. Where have each one worked at in the past? So work experience. So former CEO of Virtual Silicon Technology, head leadership of Candes Design Systems. Okay, the CEO has decent experience here. Background in semiconductor IP EDA tools. Paul, previously general counsel at Silicon Graphics, legal leadership in tech and semiconductor sector. Chief Human Resource, former HR in Cadence Design, experience in talent strategy engineering development organization, former CFO at Merger Magnet Systems and Numetrix, financial leadership at SAS and semiconductors analytics, previously at ARM, Palm, Candes Design Systems. I think 2 people came from Cadence. Interesting. Deep experience in SoC architecture and mobile chip design. He comes from ARM. Now we got 2 people from ARM. Board of directors, background, venture capital, PwC, IBM venture capital, nice. Stanford, Stanford, another hubs, Synopsys, AMD, served as president and CEO of AMD. Raz, where you at? Board of directors, ARM Holding, former EVP ARM Holding. So there's a couple of people actually from ARM. So this is actually a really good company to look at. So investor relations, we're going to keep this in the list. In the list of some of our favorites. So by the way, futures are looking really good. The market is up a lot. Not a lot, but it's just up. Okay. Bit of investor relations. We want to look at investor presentations or events. Stock information, financial information. We want to look at filings, acquisitions, and mergers. Interesting. Nothing there, understandably. Why would they add a filter for something that's not even useful? I want to look at investor presentations. Asia. Oh wow, they have regions all around the world. That's good to see. Investor presentations. This is the August 2025 accelerating the creation of semiconductors. Okay, so Artisan Systems ahead of electronic system innovation, adoption of new semi-technologies, smart system connections, IOTA, supporting silicon-based business creation, regionalization of the semiconductor industry. Semiconductors can't function without connectivity, communication, optimization, on-chip, data transportation critical to overall performance plus power efficiency. So processor, computing, logic, functionality, memory, capacity, system IP, NOC, data improvement. Okay. The Artisan System IP business is unique and addresses market opportunity. It delivers high levels of automation, flexibility, functionality, and quality. System IP, electronic complexity rising, shrinking size and cost. We went from large boards with small chips to small substrates with complex chips. It used to be this, now it's here. And the company kind of helps build out these on-board networks and how data kind of talks to itself. Network on chip. So more logic integration into much more complex network on chips, SoCs with chips, each containing dozens of networks to move data. Challenges: with the rise of AI, computational power requirements are exceeding what is possible through traditional monolithic die design. The solution the company came out with, Artisan Multi-Die Solution, delivers foundational technology for rapid chiplet-based innovation across all markets. So chiplets is the future. AMD is very specific to chiplet-based architecture. Ecosystem collaboration for multi-die physical integration and interoperability. So they have ARM, UCL, Synopsys, Cadence. So a lot of the leadership did come from these companies as well. So Q2 customer highlights: market need, AMD. So the market is being shaped by a global need to move increasing volume of data, especially as AI demands permit many electronic market verticals. Chiplets are being used to deliver computing technology to advance industrial range from AI to data center for client devices. So Arthur's solution: AMD licensed multiple instances of FlexGen Smart Network on chip IP to deploy an AMD AI-powered chiplet across the company's broad portfolio, which spans from data centers to edge and end devices. Arteris revolutionary FlexGen IP will be used in combination with AMD's Infinity Fabric interconnection, underscoring the increasing complexity of modern SoC and chiplet-based architecture, which now requires multiple highly specialized interconnected or NOCs. So Renaissance: many modern chiplets are limited by memory access and require advanced system-level solutions that advance memory computing. As AI pushes the limits, performance and power efficiency, monolithic SoCs with chiplet capabilities have become essential in delivering the integration of scalability of a traditional SoC design. So the solution they came out with, the Renaissance developed, is leveraging Arteris multi-die technology in their R-Car Gen 5 SoC platform for advanced driver-assisted system, ADAS, that integrates CPU, AI-enabled NPU, IVI-enabled GPU. Artisan technology plays a key role in realizing this vision by providing so practically overall this company is a research company. They develop and create like some of the they research and come up with some of the best ideas, and they work with the AI companies like AMD to come up with a chip design that is most efficient and can be used. So honestly, this company is pretty impressive. I've always kind of looked, because the best part about a company like this is if they come up with something that's just a major breakthrough, they're going to benefit significantly because their product will be used across a whole bunch of other companies. So any chip that gets designed in the future is gonna be on the back of what this company does. So FlexGen Smart NOC IP momentum since Q1 25. They said RSO business is 50% plus of AI application in 2025. Wow, that's pretty impressive. Their business is 50% plus of AI application. AI everywhere, data movement is key competency of AI SOC. Okay, so data center training, number of customers, they have 5. Our Arteris customers, 260 AI SOC design wins. So they have all these companies regarding data center training. Data center inference, they have 30 plus customers June 2025. And then the edge inference, I think this is where AMD and all the other companies are. Bosch, Renaissance, Regen, SEMA, Samsung, Telechips. Interesting. I'm surprised I don't see AMD in here. And then it said automotive EV OEM number 1, automotive EV OEM number 6. Interesting. Okay, so building a leader in the SoC data movement, IP, and software. Broad customer base on deploying others in interconnected IP and associated integration software. So silicon proven IP used in over 3.85 billion unit chips to date. So here's the diversified customer base. So these are all the customers. Pretty impressive. AMD, Samsung, Renaissance, Mobileye, Bosch, NIO, Toshiba, Honda. Wow. Pretty impressive company here. Strategies for multi-year growth. 2020. Arteris revenue growth story. More AI. 2025. More chiplet. New MCUs. New products. The organic AIP license revenue of high teens, low 20s, CAGR driving AI from data, growth in multi-die design, microcontrollers, support FlexGen Smart IP, and saw new product releases. Royalty revenue up 3% CAGR, M&A target every merger and acquisition target every year or so, focused on revenue cash accretive, unprofitable opportunities, synergies with the existing business line and SoC market. So they want to grow API license, so AIP license revenue. That's like a bulk of how they want to grow. They want to grow through royalties, and then obviously mergers and acquisitions. So 91% of their company's revenue fully ratable, 2 to 3 year of average design term, long-term CAGR high teen, low 20s. And then a little bit, about 9% comes from long-term CAGR, 2x license growth rate, diverse royalty system across multiple verticals, dozens of customers. So most of their money is coming from this license and support. They said their operating expense, ongoing scale and R&D channel innovation, operating leverage, G&A, free cash flow, majority of deals paid up front, revenue deferred, op expense is incurred. Remaining performance obligations, so essentially deferred revenue on BS. Q1, Q2, Q7, Q8. I don't even know what Q8 is. Is that 2 years? So future royalty engine, 60% of design wins, weight to deliver royalty revenue. 21% of customers' designs still remain ramping up. So it says yield majority of royalty dollars. Got it. 4-year. Okay, I see. So they're based on royalty, and these could be, a company said, hey, here's some of the money. We need this design. Can you design this for us? And then they'll maybe do research and kind of find a way to do that, and then they get paid based on that once the company uses the product. So these are the royalty programs. So they want to grow this royalty-based business here, royalty, AIP royalties, but then their overall business is here. So as you can see here, they want to do more AI, more chiplets, and then new products. Wow, this company is actually really impressive. Design win. Because one thing that I do like is, first, the leadership, and then second, the deferred customer base is really, look at all these customers. And it's not even in any one given specific industry. It's all the whole bunch of different industries. All right, so guidance. Thank you. All right, that's the end here. Business model. So their business model here is, so they have about 6 to 9 month license support, license fee royalties. They give them a license support, semiconductor system companies, and then they get the license fee and royalties back to the company. And then this company does a semi-sell SoC to OEMs. So AMD, for example, sells stuff to the OEMs, and OEM deliver electronic systems to the customer. Customer evaluation and acquisition, customer product SoC design cycle, customer system design cycle, and then OEM customer SoC product. Because what happens is, once the OEM likes the product and they use it, they're going to go backwards. And they're going to say, hey, we're going to need more of that. And they're going to go back to them and say, we're going to need more of that. So just like a self-feeding machine. So this up next, license revenue. So Q4 of 24 was $1 million. $1 million, $1 million, $1 million, $1 million, right? So Q4 of 2024, ACV fiscal year. So they practically get their revenue. Yeah, this is just showing how they make their money. So RPOs. Yeah, so they don't make all their money right away. They kind of they make their money in the future. Interesting. Okay, so added that to the list. Arthros added to the list. Enable Inc. Enable Inc. I don't know if monthly. They're worth looking at here. What do they do? Quick review. Engages in provision of cloud-based software solution for managed service provider, enabling them to support digital transformation and growth of small to medium-sized enterprise products. Its products include remote monitoring, management, backup, and data protection. All right, already kind of interesting. Let's see what this looks like. Simplify cyber resilience endpoint to cloud. Yep, they're already going to be added. I like these types of companies. Investor relations, solutions and outcome earnings rave. So boom, boom, meetup and punish. Okay. This is amplified efficiency and risk. I mean, from what we saw recently with Amazon Web Services, I think something like this is always company like this is always really awesome to look at. Leadership. Nope. So, okay, products. So, remote monitoring and management. They have all these platforms, and they got cloud commander. Okay. Cover data protection, backup, disaster recovery, data retention, Microsoft 365 backup, EDR. So they got security, EDRs, threat hunting, managing EDR. Okay. Tools and services, solutions, resources, events, blogs, partnerships, careers. Okay, let's look at their investor presentation. Whoops, that's not them. That is who I want, but this is the investor relations page. I want the investor presentation here. So August 25 investor presentation looks really interesting. We got Enable at a glance. They make about 514 ARR. So once again, like most companies, they are a recurring revenue based company. So unified endpoint management, security operation, and data protection. Enable the digital evolution of business, making them more efficient, effective, and secure. So small and mid-market business are going digital. Yep. Boom, break, fix, help desk, secure cloud, AI, data compliance, IT sprawl. Digitization pro risk and challenges. 55% of IT professionals say that the struggle to manage SaaS sprawl. 60% of small business owners state cybersecurity is a top concern. Yep. And then 25% projected that KIGAR and global data volume 2024 through 2028. Enable delivers a cyber resilience business needed. So Enable says the middle. Here's the governor, NIST cybersecurity framework, protect, identify, recover, respond, detect, identify, and then so on and so forth. Data protection, unified endpoint management. Powering the vast ecosystem. So Enable sits here. You have the layers of distributors, VARs, and MAS, and the businesses below it. So payment flow, software provider, software and service provider, SMEs, subject matter experts, and then you got the rely on channel providers and for software and services, small businesses, service large and growing TAM. So UEM 60 billion growth rate, data protection 14, and security operations of 24 billion. Total Enable TAM market size 44 billion. They think, and I think that's grown about 14% in 2025. Product portfolio, attack surface area expanding exponentially. So expanding parameters, modern parameters, traditional parameters. So endpoint and server, but then modernize. You got your mobile, you got identity, you got application, websites, and then it's expanding into AI, Internet of Things, data, social media, artificial intelligence, SaaS, cloud workloads, and cyber physical, something like that. So practically, they're saying, hey, the threat for businesses is kind of growing just because of the number of connected endpoints. So cyber endpoint management, security operations, and data protection are the layers that this company works in. Cloud native, open and extensible, unified customer experience, AI powered, unified data layer and workflow orchestrator, unified endpoint management, security operations solutions, Adlumin, and then they got the data protection and recovery solution, core deliver service workstations, Microsoft 365 backup, and DR4 from a single console. Fully managed cloud backup storage, immutable fortified copies, local drive, Hyper-V server, cloud, Microsoft 365, Azure recovery test. Now this is actually pretty cool company. Best brand protection, blah blah. Their go-to-market strategy, channel-driven, one-to-many distribution, VAR, MPS, software provider. These are proven brands and track records. Multiple force propelling growth, financial results, revenue, fiscal year 21, 346 million. Now they're sitting at 400 and 66 million. Adjusted EBITDA growing significantly as well. Quarterly performance, Q3 22, their total revenue was 94, now at 131. Grew here, but kind of flat from Q4, Q1 of 2024. Revenue is kind of flat, which is not really that good. Adjusted EBITDA kind of grew once again. Q2 2024 adjusted EBITDA went down, but Q1 and Q2 of 2025 we're seeing some growth for the company. EBITDA margin was holding strong, and then it did a sharp drop here to 27 and then going back up again. So dollar-based retention is going to be high. Customers with ARR 50K, so nice. So the number of customers that are paying 50,000 or more is actually growing. That's awesome. Average revenue per customer is going up. So they're upselling customers with the different products that they have, or they're increasing the cost of those products. Compelling drivers powering our path forward. Growth, retention, small businesses, mid-market growth, pricing and packaging, cross-selling extensive suites, the net retention, land new customers, total growth. Actually, this is a company that's a yes for me, bro. They're gonna go right there, get rid of this one, Endable was a good find. How is this company doing? They probably got beat up since IPO, to be honest. IPO at like, oh wow, almost at $90. TaskUs provides a digital outsourcing service. The firm, with its omni-channel delivers model, is focused on providing its clients with 3 key services such as digital customer experience, trust plus safety, artificial intelligence services. Doesn't sound interesting at all. They didn't sell me on that description. This company here, let's see, what the heck do they do? Circuiting, distributor scrap book, craft home decor item. The firm's products include flagship line of cutting machine such as Circuit Making Families, Circuit Exploring Families, and Circuit Joy, accompanied by other tools like Circuit Easy Press. What? Let me just look at the overall. Yikes, insider sales is ridiculous. The CEO is dumping all of his shares. Jeez. Disgusting. Uh, Unusual machines. Ooh, okay. Um, Interesting. This company looks like came to $1, IPO'd around, what is this, $4? Dumped after IPO, exploded to $19, came back down to 4, and now sitting at the $15 price. Seems like it actually might have something here. $500,000 company. Um, they say Unusual Machines is development development stage technology company which engages in provision of drone solution with focus on first person view. mm, I don't know. I've already found a significant amount of drone companies, but here, okay, media coverage, events, investor relations. Website is trash. Okay. Um, so Unusual Machine primarily serves the American drone industry by building and selling drone components. In 24, they acquired FPV market leader Fat Shark. They expect demand for drones to continue. The Unusual Machine strategy: investors, domestic products, leadership. Oh, what the heck? Alan Evans. Okay, let's use. Um, so what about this site? Tell me about the leadership past experience. Potentially, maybe this is a whole bunch of nothing, but chief executive officer, 2018, 1,000 publications. So he writes articles. Alan Evans, co-founder and CTO of Avignet, a company known for its wearable display technology, optics, augmented reality, and hardware innovation, experience in startup leadership, former CFO of Ave, LiDAR perception company for autonomous vehicle, also held a senior financial role with some company no one knows about. IPO readiness, brings deep experience. Okay. Okay, so this leadership doesn't seem like anything crazy, really. Okay, so we only see like literally 3 people on the leadership board. You got the CEO, the CFO, and the COO. Press release, information, investor, analyst coverage. Yeah, it seems more of a hype to me. Not interested. A new. All right. My credit. So he said my credit score tanked. Why? I paid off all my debt and closed ancillary accounts in September, October. This suggests America wants you in debt. Score since rebounded, but it's clear the company just wants you to leave accounts open, you to stay in debt. Nice. Typically uh, typical pre-Monday green. It feels like we see this 95% of the time. Yep, the pre-market is looking juicy. All right, so what did we find? We found a couple of companies here. I am going to probably post these companies on X. So we found Arteris. I think I pulled out their Arteris's financial information. Well, I accidentally flipped the investor relations page. Accelerating technology, Arteris. So I can close out their website. We found also Skywater. So all these companies are kind of interesting. So would you invest in any of these? Question mark. So who do we have? We have one. What's their ticker symbol? Skywater. So this company press release. Semiconductor play. Skywater Technologies. Their ticker symbol, Arteris. I should just copy all this. Let me just do it this way. Boom. AIP. So Arteris. So these are the three companies that we have been able to find that might be worth investing in. Arteris, Enable, which is pretty cool company. Arteris, this company is semiconductor business. Companies, semiconductor invest. And then Enable. Enable Inc. The second one, number 2. Boom. Space $. Enable provides cloud-based security data protection and unified endpoint engagement solution services in the United States. Provide cloud-based security and data protection and unified endpoint management. So I would say like cybersecurity. Three. We got Enable, we got Arteris, and then finally we got Skywater Technologies. Skywater Technologies. This is all these companies. Out of all that research, these are the ones that are the better ones to actually look at. Together with a subsidiary, operates a pure play technology foundry that offers semiconductor development, manufacturing, and packaging services. semi development and manufacturing. Cloud-based. This one is Enable. Pure semiconductor development, manufacturing, packaging services. I don't know, I might just say that semiconductor. All right, so here are the companies that we decided to sum up with. These are companies IPO in the last 5 years. USA based USA based technology tech companies under $40. Whoops. So they're IPO in the last 5 years, US based tech companies under $40 that are interesting investment opportunities. Boom. Would you invest in these companies? Question mark. Boom. That's it. So I don't know. I think those are the companies that I am kind of interested in. Wait, what? Notification. Did you give at SoFi Insider credit before opening the app today? There's no way this is real. Anyone who wants to repost this meme must give me credit in public tweet and send me 20. Oh, that's funny. Google, more than 3,000 companies reported earnings this week. Wow. Here are the 6. Let's see, let me make this bigger. Here are the 6 best charts we found. Google Cloud backlog. Jeez, that is so crazy. Look how it was all over the place, and out of nowhere, quarterly cloud backlog. Alphabet. That's why when I'm looking at some of these technology companies to invest in, I see something like this. I see that there's demand for Amazon Web Services, cloud-based information. I see Google cloud backlog growth just at all-time high. And then when we just went like through all these companies and the products they service, especially Enable, they are playing exactly within that industry. So that's why I think they have potential. Wow. The future of cross-border payment is already here. Man, SoFi is getting ASML. Check out this video ASML made explaining a little how the products work. Sure, let's watch it. This seems interesting.
A chip is a tiny skyscraper. Its circuitry often includes billions of transistors and stretches through more than 100 layers, and every structure needs to connect perfectly. At ASML, we build hardware and software that helps our customers mass produce this microscopic circuitry. Our lithography systems print chip patterns by shining light from a source onto a blueprint or mask, and then harnessing that light with optics to transfer the patterns to silicon wafers. But in the world of nanometers, physical and chemical processes deform the pattern. So as chip features continue to shrink, lithography becomes more challenging and more crucial. As lithography experts, we fundamentally understand the processes that influence chip patterning, and we develop models and algorithms that predict how a pattern will print on a wafer. Using these insights, we can then adjust for any deformations and tune the lithography system to produce the best possible image. We call this computational lithography. First, our source optimization tools meticulously adjust the illumination to produce sharper images of critical chip features. Our mask optimization tools design masks that correct for optical effects, so chip patterns appear exactly as intended on the wafer. Light heats and deforms the optics, so our wavefront optimization tools reshape the light once more to ensure that the pattern prints correctly. And we do this pattern by pattern, layer by layer, chip by chip, wafer by wafer, at the volume, speed, and robustness our customers need for mass production. As these tiny skyscrapers continue to grow and their features continue to shrink, our task only gets harder, but we're up to the challenge. We're committed to powering technology forward with you.
All right, that was pretty awesome. That was ASML, how ASML creates their chips. Let me just go find a full video on the process. How does ASML create their semiconductor chips? That's pretty impressive. That was a pretty impressive video of how they do the entire ASML make chips faster, 400. So let's watch this video here. Which kind of covers exactly how that is made. This company here, you can see on my left, it's exactly what I was talking about. This is the company that is in the United States that works on SoCs, and kind of, which means, like, you see these lines connect to different chiplets to each other, and this is how AMD functions. So this company is doing something similar here in the United States.
All right, we're about to enter the High-NA lab.
Behind this highly secured door in an ASML clean room, there's a giant $400 million machine.
It's bigger than a double-decker bus.
Made with such closely protected technical specificity.
Very complex, the most advanced machine tool in history.
That no filming's ever been allowed, even by ASML's own team, until we flew across the world to see it.
We're here at ASML's headquarters in the Netherlands, where 100% of the world's extreme ultraviolet lithography machines are made, and now the next generation machines called High-NA. We had to wear these bunny suits to protect these extremely precise machines from getting contaminated by our own hair and skin cells.
This is high numerical aperture, High-NA, the new generation of EUV machines, the only machines in the world capable of printing nanoscopic blueprints onto the most advanced chips. NVIDIA, Apple, Taiwan Semiconductor, Samsung, Intel, none of their advanced chips can be made without EUV.
And this company has that market completely cornered.
The first High-NA machine was installed in the US at Intel's Oregon Chip Fabrication Plant, or Fab, last year. Only 5 have ever been shipped.
Indeed, the machine is so big you can't ship them at once, so we break them into parts.
Now they're being ramped up to make millions of chips on the factory floors of the few companies that can afford them: Intel, TSMC, and Samsung. ASML says eventually High-NA will be used by all its EUV customers, other advanced chip makers like Micron, SK Hynix, and Rapidus.
Without EUV, without very advanced logic manufacturing, most probably AI cannot happen.
CNBC went from ASML's labs in California all the way to its Veldhoven, Netherlands headquarters to bring you this never-before-seen look at the world's most advanced chip-making machine, and to ask its makers exactly how it works and what could go wrong amidst Trump's tariffs, export controls, and a new training facility coming to the U.S. Suited up and through an air shower,
It's basically to blow off all the contamination from your suit and your clothes.
down several long hallways where humongous parts are being meticulously moved.
How many people would you say are working here 24/7?
Inside the EUV factory alone, it's like 2,000 people. It's a 24/7 operation.
Essia Hadou took us to the restricted lab space where 40 years of ASML's technology research all comes together.
It takes approximately a year and a half to create the system.
Hadou leads the team that tests and qualifies the High-NA machines here.
It still does blow my mind. I think even if you learn more about it, it blows your mind even more.
The big machine, in the end of the day, is used to transfer a pattern, which we store on a mask, onto a wafer. And then at the end of the day, you cut them in pieces, you package them, and then you end up in your phone.
Joost Benschop joined Dutch electronics giant Philips in 1984. 2 weeks later, ASML was founded as a subsidiary, conducting research out of a leaky shed nearby in Eindhoven. It broke off from Philips with an IPO in 1995, and 2 years later, Benschop helped spearhead ASML's first foray into EUV.
3-4 years later, we had enough confidence to put all our eggs in one basket called EUV. With hindsight, we can say we placed the right bet.
On a yearly basis, I think we file several hundreds of patents on EUV.
Christophe Fouquet began as CEO just over a year ago, but he's been with ASML more than 17 years.
We barely made it. I think sometimes people forget that, but EUV took us practically more than 20 years. I would say it's been a very risky investment because when we started, well, there was no guarantee the technology will work.
By 2018, ASML had shown that EUV was possible, and it's the same process used in High-NA. Here's how it works. Chips are built in a grid formation on thinly sliced wafers of silicon, each with up to 100 thin layers that make up billions of transistors that determine what the chips can do. These layers are printed using lithography, extremely precise rays of light projected through a mask of the chip design until they hit the surface of the wafer that's been coated with photoresist chemicals. ASML's older generation DUV machines, which it still makes, use rays of deep ultraviolet light with a wavelength of 193 nanometers. Nikon and Canon in Japan are still competitors in DUV. But ASML's real breakthrough came with that bold bet on a technology many thought was impossible, using even shorter wavelength extreme ultraviolet light, EUV, something that to this day no other company does.
A few more people tried for many years.
The reason we created these initial robots was to solve a pretty basic problem.
But the size of the investment, the commitment you have to have, I think discouraged quite a few people.
Transistors have gotten so small, down to 10,000 times thinner than a human hair, that ASML decided to create its own source of smaller, more precise EUV light. At a wavelength of 13.5 nanometers, it's the width of just 5 DNA strands laid side by side.
So small that it gets absorbed by almost everything. And that's why this whole system needs to be in a vacuum.
This tiny thread may look like the strand of a spiderweb, but it's actually molten tin being shot out at 50,000 droplets a second. The tin droplets are vaporized with a laser, and those tiny explosions are what emit photons of EUV light.
This is called a CO2 laser. It's been used in the car industry for many years. They would cut through steel with one of these. We use 4 of them to shoot at one of these tiny tin droplets to generate a plasma, which is hotter than the sun. That plasma generates EUV, and that EUV is captured by this collector mirror that comes from Carl Zeiss, and brings the light into our scanner.
The light bounces off of mirrors that aim it through the lens, much like how a camera works. But because EUV gets absorbed by typical mirrors, German optics company Zeiss made specific mirrors just for ASML that are the flattest man-made surfaces in the world.
And then the light is emitted through the projection optics onto the wafer, which is about here. So this is the wafer table.
When the EUV finally hits photoresist chemicals on the surface of the silicon wafer, it prints the minuscule blueprint that makes up the chip. The aim needs to be so precise, TSMC says it's equivalent to shining a laser from the moon to hit a coin on the Earth. EUV made up less than 8% of ASML's total number of machines sold in 2024, 44 EUV machines versus 374 cheaper DUV machines. But with a price tag of $220 million, EUV made up 38% of ASML's system sales revenue.
But the cost of the chips the tool is going to create is going down.
Because you're the only company in the world that makes these machines, what's stopping you from setting the price even higher?
Well, what stops us is Moore's law says that we need to continue to drive costs down. This allows you to go to the next node, and then the next node, and then again the next node. If this was to stop, then everyone gets stuck.
ASML began developing its latest $400 million High-NA machines around 2016. Inside, all the same processes still happen with the same EUV light source, but there's one key difference.
We increase the aperture of the opening angle of the lens.
High-NA stands for high numerical aperture, meaning it has a larger lens opening, increasing the angle at which the light is captured by the mirrors. More light coming in from steeper angles allows High-NA machines to capture increasingly small designs on chip masks, so they can be projected in one exposure step, whereas original lower NA machines reach higher resolution to project these tiny designs using multiple exposures through multiple masks.
1 become 2, then 2 become 3, 3 become 4. And when the number increases, it gets very complex process-wise, and the yield goes down.
But with a higher NA, resolution improves, and the small designs can be printed with fewer masks, saving time and money.
The larger the number, the smaller the thing you can print.
But this higher NA also comes with a much higher price tag for one main reason.
The higher the NA of an optic, the bigger the mirror you have to use, and therefore the bigger the system.
These machines also take up a huge amount of power.
How much power do these machines take?
I think they take too much. If we don't improve the power efficiency of our AI chips over time, the training of the models could consume the entire worldwide energy. And that could happen around 2035. Since the moment we started EUV, 2018, we have reduced the power, the energy needed per wafer exposure by more than 60%.
ASML says its machines print about 200 wafers per hour, 24/7, 365. The goal is several hundred per hour.
You can print, at the end of the day, millions of these wafers per year.
At a conference in February, Intel said it started making chips with High-NA, using it for some 30,000 wafers so far, and that it's about twice as reliable as previous models. And Samsung said High-NA could reduce its cycle time by 60%.
High-NA means two things. First and foremost, shrink, so there's more devices on a single wafer. And secondly, by avoiding multiple patterning, you can make them faster and you can make them with higher yield.
In reality, every chip is made using multiple different lithography techniques at different resolutions.
Every chip consists out of like 100 different layers. Most of the layers are actually made with deep UV, which is a much smaller system.
So that is pretty cool. So that's how the chips are made. And obviously in the United States, President Trump has decided we need something like that here in America. And so he is kind of making Intel that company. But at the end of the day, all this does is continuously drive the need for an industry for what we're seeing. We're seeing major demand for AI and new types of innovation. So we're gonna go ahead and look at what's going on in the world. So you have this Apple Vision Pro that people are using, and it just shows like amazing products that are just being created annually For example, you can now color it's called gesture splatting on Vision Pro. This app is the latest addition to my comprehensive list of apps that bring. All right, so Gesture Pro. So for example, you have this guy literally put on the glasses and he's painting a couch and creating different designs within his house, which is pretty awesome. Once again, you can see here, you don't know what's real and what's not, but at the end of the day, you can kind of have your home look a certain way by just having the Apple Vision Pro kind of overlay what it is that you can see. Pretty impressive. You can now explore AI generated world using the Apple Vision Pro in 2 ways. So option 1 is to get a link directly from Marble, and you can go in there and just look at them. As you can see, this guy is here just looking at the world in which it could be like a VR version of a game that you're creating. You can actually interact with it. In the future, I think presentations are going to look something like this, which is pretty impressive. The way we look at like real estate could change. The way we present different technologies, ideas is going to be way different. The way we interact with products around us is going to be significantly different. The way we play video games and everything else. So the world is really changing a lot, with robotics, with the VR, AR products that are being developed. And from what we see, like we see all these types of products, but these are just these are all literally where we are now, and this is the worst that they're gonna get. And from here, it's only gonna get more complex and way better. So let's go ahead and check out what Marques has to say, what's going on with the Apple Vision Pro.
This is the Apple Vision Pro. And this is the brand new 2nd generation Apple Vision Pro, nearly 2 years later. Yeah. So you might have heard that Apple dropped the latest version of their silicon, the base M5 chip, this past week, and they chose to put it in 3 devices: the iPad Pro, the 14-inch MacBook Pro, and the Vision Pro. Okay, so this is actually a partial upgrade of Apple Silicon. We just got a new M5 chip, right? So anything that has a base chip, this is the direction of time, and this is the direction of how powerful the chips are. Anything that has a base chip is a candidate for getting the M5 upgrade, which is why we see this in things like Vision Pro, which went from M2 to M5. We also see it in the 14-inch MacBook Pro and the iPad Pro, which go from M4 and M3 to M5. Notably, there is no Pro or Max M5, so things like the 16-inch MacBook Pro, which uses those chips, doesn't get upgraded yet, stays on M4. We'll probably see that eventually. Kind of like we'll probably also eventually see an M4 Ultra, which we don't have yet, which is why the Mac Pro and Mac Studio are on M3 Ultra and M2 Ultra. I got those backwards, so not respectively. Either way, Mac Mini, iMac, other things that have the base M chip will probably all eventually get M5. And that's about it, I think. Yeah, new chip.
Imagine being able to build an app with your name on it, just by thinking about it. Meet Base 44, a complete AI creation platform. Describe what you want.
Okay, anyway, aside from that new chip, the new 2025 Vision Pro is more or less the same as the original from 2 years ago. Same dimensions, same aluminum frame and glass on the outside, same buttons and digital crown, same speakers, same exact high-resolution micro OLED displays on the inside with the same field of view, same exact battery with the same tethered cable that you put in your pocket while you're wearing the headset, and it has the exact same 12 cameras and sensors and LiDAR scanner all around the outside, and the same R1 chip inside to combine and process all the data from all those sensors. Same thermal system, same fans, same vents, same outside screen to see your persona's eyes. So yeah, much of this is unchanged. Not that you need change for change's sake, but when the Vision Pro first came out, there were immediately tons of complaints about how heavy it was and how uncomfortable this thing was to wear for long periods of time. And so I would think that maybe there's some work happening on the internals, maybe thinning out a bit of that aluminum frame, just saving a few millimeters and a few grams here and there, but no, none of that has made it to the new one. Matter of fact, the weight of the new one is listed as higher than the original, because it comes by default with this new dual knit band, which is where seems like 100% of their effort went into making the Vision Pro more comfortable. And so to their credit, it is actually a really nice and cleverly engineered band. So you probably remember the first gen band, this solo knit band, which was in all the commercials and looks really pretty, but the problem is it's pulling up against the back of your head and it's trying to hold all of the weight from the Vision Pro, and it's not great at it. Basically, it ends up sagging onto your nose and really being incredibly painful to have on your face for more than 10 minutes. So there were a bunch of other dual strap bands that came out, including Apple's own, that did a better job and distributed the weight better, but they were also pretty ugly. Not that it mattered to most people, but it mattered to Apple. So they spent presumably the last 2 years developing this band, which distributes the weight much better across the back and top of your head. And then this dial right here, you twist to tighten the back and then pop out and twist to tighten the top. And it is significantly more comfortable. The back fabric piece is a bit smaller than it was in the solo knit band because it doesn't have to be as big, but it also now has tungsten, literal metal, in the back to help counterbalance the weight on your face. And you can feel it. Like the original band has all these empty slots. You can feel the metal filling in the fabric ones on the new one. And that's the reason for the higher weight number. Either way, now it's both much more comfortable and still good looking. And you can also just buy it for the old Vision Pro for $99. So I've been using this new M5 Vision Pro for the past couple days to see if I can actually see and feel the difference that this new chip makes. Because yes, every Vision Pro has all the new software features of Vision OS 26, the new more realistic personas, the pinnable widgets, being able to turn regular photos into spatial scenes, all this cool stuff. So the M5 chip brings a few other incremental improvements here. Basically, it can load apps faster, it can render more pixels, and it's more efficient, so it has a longer battery life. Now, the loading apps faster, it's nice, especially since you're stuck in this headset and you can't exactly reach for your phone or burn time to check notifications while things are loading, so you kind of just have to sit there and wait for it to load. So it's welcome that things are loading faster, but it's not exactly a game changer. And then same with things like creating spatial scenes out of still photos. If that's something you do a lot, it's not instant, but it is much faster on this new one. The 10% more rendered pixels, you really aren't going to notice that. Even if you do back-to-back the M2 and M5 versions, like maybe a handful of people on planet Earth ever will. But yeah, it's the pass-through cameras are still the same cameras, so it still looks the same. The displays on the inside are still the same displays, so it still looks the same. The slightly faster max refresh rate of 120 Hz versus 100, it's appreciated, but again, it's not major. It's like, these aren't huge changes. These are just a bunch of smaller incremental updates that over a longer time will start to add up on each other. Same thing with the 20% longer battery life. So yeah, a new band and a spec bump. Otherwise, same form factor, same materials, same cameras, same displays, same heavy weight, and same $3,500 price tag. So why is this interesting, you might be asking? I'm glad you asked. 2 reasons. The competition and the strange lack of competition. See, Samsung has just come along and finally, years later, actually dropped their full mixed reality headset running Android XR. You might remember my preview video of it a couple months ago showing all this stuff they're promising it can do with lots of equivalent features to the Vision Pro. In my video, it's still a prototype. They're calling it Project Muhan, but now they're bringing it out to real people and putting it on sale alongside the Vision Pro this year.
When the client sees the website and is like, whoa, we are Studio Merge, a creative studio.
But outside of that, there is a noticeable lack of other companies trying to make their own Vision Pro and make a super competitive, super highly priced premium VR XR headset. And I think that goes alongside all of this crazy development we've seen in the smart glasses space. Like just last month, I dropped my video on these. These are the Meta Ray-Ban displays, and they're not the only ones in the space, but they are one example of how much dramatically faster the progress has been on these than the headsets. Like this makes it look like the Vision Pro is sitting still. And I think in a lot of ways, these are much more appealing to way more people. Vision Pro is...
All right, I'm going to have to pause that and take a look at this. I think we just have a post on Truth from Donald Trump talking about tariffs. So next week's case on tariffs is one of the most important in the history of our country. If a president is not allowed to use tariffs, we will be at a major disadvantage against all other countries throughout the world, especially the major countries. And in a true sense, we would be defenseless. Tariffs have brought great wealth and national security in 9 months that I've had honor to serve as a president. The stock market has hit all-time high many times during the short time of office, with virtually no inflation, national security that is a second to none. Our recent successful negotiation with China and many others put us in a strong position only because we had tariffs with which to negotiate fair and sustainable deals. If a president was not able to quickly and nimbly use power to tariff, we would be defenseless, leading to perhaps even to the ruins of our nation. The only people fighting us for foreign countries who for years take advantage of us, those who hate our country, and Democrats, because our numbers are insurmountably much better. I will not be going to the courts on Wednesday, in that I do not want to distract from the importance of the decision. It will be, in my opinion, one of the most important consequential decisions ever made in the United States Supreme Court. If we win, we will be the richest, most secure country anywhere in the world, by far. If we lose, our country could be reduced to almost third world status. Pray God that does not happen. Everything's so extreme, one or the other, but I think it would be, I don't know, do you think that the president should be allowed to have the ability to tariff a country? So that's going to be the debate here. But let's continue watching this video, Marquez.
Was, of course, a first-gen product, which means that we and Apple didn't really exactly know how people would use this thing. And it comes out, and a lot of people are willing to spend the $3,500 on it, but then 2 years later, it turns out most of the use of Vision Pro has been watching movies and gathering dust, which is a shame because it's capable of so much more. But it turns out people like the smart glasses, which only do a subset of what the headsets can do, because they carry a much lesser social penalty while wearing them in public. And you still get a first-person camera, you can listen to music, you can ask questions, get directions, etc. And yes, they are still nerdy, but not as nerdy as this. So to answer the question in the title, I think Apple has now seen all of this, and they've gotten the sales numbers and the usage stats and all that, and I think they've realized that this isn't going to be some gigantic smash hit, and they've kind of trimmed it back and dedicated a little bit less to it. Not given up, obviously, and there's still plenty that Apple's doing with liquid glass and the spatial videos and stuff like that. But I think they know now, okay, this isn't some huge smash hit. Maybe allocate resources towards some other stuff. There's even been some other reporting that they've scrapped plans for a future lightweight version of the Vision Pro that was going to come up after this, like the Vision Pro Air, and they're shifting those resources to try to develop smart glasses to jump on that train. And that's actually perfectly in line with this video I made in October 2023, trying to figure out how we get to this mixed reality dream. So in case you haven't watched that video, spoiler or TLDR, tech companies are trying to achieve this awesome face computer vision of the future for everyday use from two different directions, by building these incredible headsets and then trimming them down, or by building these smart glasses and building them up. And it turns out maybe, just maybe, one of those directions has way more traction now than the other, at least for the everyday computer part. Turns out there's way less people who want to spend significant time in a face computer, even if it's really impressive, even if those pixels with the pass-through mode represent the world around you while they're on. There's just nothing quite like having actual reality through some glass with some stuff overlaid on top. But again, only time will tell. We'll see. Thanks for watching. Catch you guys in the next one. Peace.
There we go, Apple Vision Pro. I think it is interesting though, because there's a lot of companies getting into this kind of industry. Samsung Galaxy, they have their XR, which is more of like a 3D experience. And maybe we can watch a video on this guy's reaction unboxing the first look. And their products are almost just as good or better than the Apple Vision Pro. Keeps saying Pro. Let's go ahead and just get to the point and see what it talks about.
Now, the way you adjust it is super simple. You just have this wheel on the back and you just turn left to make it go loose and turn right to tighten it. All right, now I'm in this setup process, but I can see what's going on. I can see a little pass through, but I can also like see a digital overlay of my hands, which is pretty cool. So I'm just gonna go through this little setup process and then I'll be able to show you guys what we're doing. Okay, I just got a notification on my phone to set up the device. So we'll go ahead and do that. And it's scanning the QR code on my phone. That's kind of cool. Now, upon setup, it's giving me the option to use hand aiming only or hand and eye aiming. I think I'm just gonna go with hand aiming because it's actually pretty easy. Okay, so now I officially have it all set up and I'm now screen recording. So you guys should hopefully be able to see what I'm seeing right now. So I currently have pass-through mode on, so I can like see what my real world looks like with these digital elements overlaid on top of it. You can also kind of see how the hand tracking is working because it has like this digital overlay on top of my hand. So that's pretty cool. Now, I'm definitely not going to cover every single thing that this device can do in this video. This is more so just like first impressions, trying it out for kind of the first time. Now, first of all, the way I control this is with my hand. So I'm actually pointing with my hand. And then when I want to select something, I just pinch my pointer finger and thumb together. So like right here, I'm going to pinch and open the YouTube app. And then I can pinch and drag to scroll. And it's actually very, very intuitive the way it's controlled. And then like, let's say I want to search for something. I'm just going to pinch to select the search bar. And then I actually have this virtual keyboard right here and I can just poke the number. So I'll try to search for my channel, PARKER. And then if I look up, there's my channel and I'll go ahead and select it. And there is my channel. And so now I can watch a Parker Burton YouTube video on a giant screen in my house. Now I can also drag this screen around to literally anywhere in my full 360 degree space. So like, let's say I want to kind of have it on the wall over to my left side. And then I can even drag this corner to make the screen even bigger and have an absolutely ginormous YouTube video next to me. And then if I drag the bottom, I can even push it away from me or bring it closer to me. Oh, wow. And so now, wow, look at that. It's like there's a giant YouTube on my wall. Now, in order to bring up the menu, I just hold my palm facing in front of me and then I hold my pointer finger and thumb together. And then I can drag over to go back, to go home, or to go to my recent. So I'm gonna go ahead and go home to bring up the main menu. And what's cool here is that I can open up multiple different apps at the same time. So like, let's say I want to go to Google Maps, which is kind of a cool thing with this device. And so now you can see to my left, I have a giant YouTube screen. In the middle, I have Google Maps. And to my right, I have the Play Store open. Actually, I searched for my Android app. We'll try that here in a second. And again, you can drag these windows wherever you want in your full 360 degree virtual space. Now, one thing that's pretty cool with Google Maps is this immersive view. So I can actually like explore the city in 3D. And so I can pinch to zoom out here, and then I can just like look around all of New York City here. And then again, I can use both hands and then pinch to zoom in, and then I can pinch to kind of scroll around the city like this. And what's cool is that they even have these immersive experiences. So like, here's one right here. I can actually go inside of this building. Now, of course, you can't do this with every building, but they have select places that you can actually like go inside and kind of like walk around and look around, which is pretty cool. Now, because this is an Android device, you have access to Android apps. So you can see I have the Google Play Store open right here. And one thing I really want to try is to see if I can actually play my own Android game on the Galaxy XR. So this is a game that I released a few months ago in collaboration with my younger brother, who was kind enough to code this whole thing for me. And so let's see if we can go ahead and play this game on Galaxy XR. And look at that, my game is officially open. Let's go ahead and make the window a little bigger. We'll have a giant turret escape right in front of you in my dining room. And let's hit start game. We can use both hands. So we have the jump and we have move forward. Look at that. I'm actually playing Turret Escape in XR. This is actually so cool. I don't know if this is the ideal way to play this game, but this is sick. I just think it's really cool that we did not code this game specifically to work with the Galaxy XR. We did not even update it at all. It just works. Now, this does also have a camera. So of course, that's what it uses to, you know, do the pass-through mode, but I can also just like take photos. So let's take a photo and I guess we can go ahead and look at it. Here is the photo that we took. Boom, right there. And I guess, oh, we can even zoom in. Look, you can see the camera. And then again, just as a reminder, I do still have this ginormous YouTube window opened right next to me. Now, for anyone wondering about if you can use this with prescription lenses, the answer is yes. They actually collaborated with iBuyDirect so that you can buy prescription lenses for the Galaxy XR. I think they're $100. The only problem that I have is my left eye is significantly worse than my right eye, and my left eye is actually out of the range that they support for the Galaxy XR prescription lenses. So I don't really know what I can do with that, but even without my glasses, it's honestly not a bad experience. Now, I've showed you guys the pass-through mode on this device, but if I double tap the touchpad over here, it actually brings me into the immersive view. So now I'm in a full 360 degree, like, I don't know, I'm on some planet or something. I don't know where I am. But then of course I can, you know, like open a YouTube video and watch a YouTube video on this planet with this immersive view. Now also, because this is an Android device, we have access to Gemini. So I can just hold down this like main button up here and it's gonna activate Gemini Live and I can just ask it anything. Hey Gemini, can you clean up my windows for me? And now my windows are tidied up. Look at that. Now also, because this is an Android device, I have access to circle to search. So like I can go back to the pass-through mode, and then if I pinch my pointer finger and thumb together and hold, it's actually going to enable circle to search in the real world. So like I have this hat here, I can go ahead and just circle around the hat, and then it'll give me results based on what I circle. Now looking at the settings, it does look like we can even connect a physical keyboard and mouse if you wanted to do stuff more productively than having to like tap around with your hands. We can also switch it to hand and eye aiming. So let's go ahead and try that real quick. Okay, so I went through a little calibration process. And so now like the Vision Pro, I look at what I want to select and then I tap my finger to select it. I think I will probably prefer the previous method with not using the eye tracking, but it's nice to have both options. And I will also note that as I've been wearing this, I haven't felt like it was heavy, like really at all. I know that's a problem people have experienced with the Apple Vision Pro. I never had an Apple Vision Pro, so I can't really speak to compare, but it feels very good. Now, of course, I know a lot of people are gonna say, oh, Samsung just copied Apple with the Apple Vision Pro. And I mean, yeah, it's pretty obvious that they took heavy inspiration from Apple here. Although we could argue that Samsung did VR first with the Galaxy Gear VR, like, I don't know, what was that, like 9 or 10 years ago? But that's a conversation for another day. But at the end of the day, I think it's cool that we have a similar product to what Apple released with the Vision Pro, but for Android users and for about half the price. So let me know, would you guys go for something like this? Or is this just not a product that you're into? But anyways, this has just been my first look at the Galaxy XR. I'm sure I did not cover everything, so there's definitely more to explore with this device. But yeah, let me know what else you guys want to see about this thing, and what do you think about the Galaxy XR?
Don't hurt him, Kev. All dripped up. Got the new iPhone 17 Pro, and Verizon picked up the tab on the best 5G network, baby.
No way.
It's me. Handsome and hilarious.
No way.
Ooh.
No way.
Wait, it was about the iPhone? Come on.
All right. So that seems, I like how this.
It's been fun.
Mute this. I like how this new, the Samsung Galaxy XR is a better experience. Why? Because they have YouTube and a whole bunch of other apps, which is a lot better. And obviously, Apple in the long term, they prefer to stay within their ecosystem, and so they want to use their own apps, their own like Apple Maps and everything else. But the Galaxy XR Pro seems to be pretty impressive experience from what I see and how people are using it. So let's see this experience. So this guy.
The Quest 3 has been out for a while now. It's been almost 3 months since this headset was launched.
This guy uses the Meta Quest 3 and he spends...
We're going to be using it for a bit of work, a bit of play, but there are still some issues that need to be addressed. Now, I went for the cheapest and most basic model. This is like the smaller model with the basic head strap on it. Honestly, I never really find any reason to upgrade. Even the extra storage space, I've never found a reason to use that, and I've just never had any problems. So using the LiDAR scanner, there's a camera right in the middle of here. You can actually scan your entire space in just by looking around. It's really, really cool. The only problems I've had though is when moving between spaces. So if you move between like this space and like a different room in your house, it hasn't been able to remember which spaces you're in. So you can only really use this in one room. There's an update coming which will actually basically upload your room scan into the cloud. It will then know based on your location where you are, and it will download that room scan and like the whole kind of all the clever stuff that it's doing from the cloud, which will be awesome because then I can move this between the studio and the home and not have to rescan the room in every time. So I've just connected up my Mac and just so I can get on straight on with some work, and I currently have one virtual screen in front of me, which is like, I don't know, it's a gigantic screen, but everything is super clear. I can actually have 3 screens in front of me. Look at all of my screens. But what I will say is the improved like color pass-through is really, really good. Obviously, it's not like thoroughly accurate, and it's not the same as like not wearing a headset. I can basically see everything in the real color that it is around me. The only thing is like when trying to read screens, you can't really like read a screen, particularly if you want to like check your messages on your mobile phone and like just reply to someone quickly. I can see the time, I can see the photo, I can just about make out that Chris has texted me, but I very much doubt I can read his message. Perfect. Can you let Hudson know that Tuesday filming day? So you can kind of read it. I can't read all of it. One thing that this does allow me to do, that's your glass, isn't it? Yeah. Yeah, cool. Is I can actually use the pass-through mode to like very easily walk through. It's a bit warped around the edges, but I can still like genuinely, I think, get it in the, yep, it's going in the glass. I can still genuinely like go and like walk around the house and do things and make yourself a drink. Can you drink it? Okay. Just about. But it's not perfect, but it's good enough for what a lot of people want, which is just to walk around and do normal things. Although you wouldn't really answer the door with a headset because I'm sure to you this looks like stupid. But I can see my screen, and my screen stays over there. So if I'm walking around, my like virtual laptop screen is still like over there still, which is awesome. It's just, is my hand tracking working yet? Oh, my hand. Kind of, there we go. Hand tracking is now working so I can walk around. Oh, that's cool. So if I go, I've seen this before. I can go into the kitchen, he says, carrying my screen. Oh no, I've lost it. My screen's gone. Hang on. No, I've got it. I've grabbed it. And walk into the... No, he says that he's lost it again. Walk into the kitchen with my screen, and I can watch a TV show whilst I'm doing the washing up or something. Very cool. As long as the hand tracking, he says, is now he can't grab it. Come on. Come on. There we go. Now I've got it. And I'm going to bring my screen back to my living room. I'll make it lose it. Yep. Yeah, this doesn't look stupid at all. There we go, got it. Nope, he's lost it again. So this is what I mean, the hand tracking really isn't the best. Honestly, like, I don't understand how it can lose it so easily, especially when I'm blatantly waving my hands around in front of the thing. Like, you can see it's tracking my hands now because it's bringing up all sorts of things around my hand. There you go, there's like a virtual hand now. Yeah, but I can now resume my work. And now I'm back in my office. Okay, so picking up the Quest 3 after using the Quest 1, 2, and the Quest Pro, there are 3 things that instantly hit me. Now, number 1, the image quality and clarity is incredible. It's so much better. Number 2, hand tracking to position windows as if they were real. They have kind of nailed the whole spatial awareness where you can just literally pick this screen up and move it around. Problem is, their hand tracking is still atrociously bad on these Quest headsets. I don't know what they're doing, but they should be far, far better than they are right now. It should be able to identify that I've put my controllers down and they're like below me and like not dangling my arms around like I'm still holding the controllers. It just shouldn't happen now. And then number 3, what the hell is my keyboard doing in these screen recordings of me sat at a desk trying to work? And after just around about like an hour of working, I definitely feel fatigued with wearing this like thing on my head already. Now this is just the basic strap, but I would definitely recommend going for either the Elite strap or actually finding a good third-party one if you intend on wearing this for a very long time, particularly as the strap on this headset flattens my mohawk, so that's a very, very bad decision. Okay, let's talk productivity now. As one of the big reasons I keep trying like the latest virtual or augmented reality products like the Quest 3 is the possibility of using it in just like day-to-day working, which in itself could provide a huge range of benefits, like being able to see and use a huge, like large display when you're working from anywhere, rather than spending thousands on like large or ultra-wide monitors.
134 inches in terms of like screen size. So yeah, if you want a massive cinema screen in your living room to play games on.
This is the Speediance Gym Monster 2. And if you're not familiar with the Speediance Gym Monster, let's first talk about
That is quite cool.
And it brings us one step closer to this, always connected world where augmented reality becomes part of our daily routine. So there are 2 ways I've been using the Quest to work, or rather 2 apps, and they both serve a different purpose, and both are good and bad for different reasons. Now, the first is using Meta's own app where you can sit in your virtual office and work on 1, 2, or 3 virtual screens. And by tapping on the side of the headset, you can change from being in 100% virtual reality to being in this mixed reality world where you can see and interact with your actual space, but also still see your work screens. And it does work great. I think the biggest question I get asked about this is how bad is the graphics quality on the virtual screens? And honestly, the answer is really, really good. Honestly, I had to get up very, very close to try and start pixel peeping. I generally just don't have any problems with what I'm seeing. Now, of course, if you're someone who does like to pixel peep, then I'm sure you're going to find something here to pick at and say that it's no good. But for the most part, and for most people, you can clearly read everything, you can see everything, there's no squinting, the text isn't fuzzy or anything like that. Now, where Meta's own app goes from here though, is that when you bring it into a virtual meeting and you can change the layout of the room to be more of a classroom based or more of a traditional meeting room layout, and now you can chat between yourselves with other people with this full spatial audio, so you know exactly where each person is sat, just as if you were sat there in a real meeting space. Now, other than the fact that, of course, that everyone looks like a cartoon, you can also go up to the whiteboard and write or draw things. Now, we genuinely did this for the working in VR video we posted with the Quest 2, which was 8 months ago or so. It was actually legitimately really useful to do this to plan out a video rather than kind of what I thought it would be, which was just a bit of a gimmick when it really, really comes down to it that isn't that useful. And if other users don't have a Quest headset that they can, join in on, then others can hop in via a video link and appear in this floating window. But they still keep the spatial audio, which actually makes you instinctively look towards the person who's talking because that's the direction that their voice is coming, just like in real life. So that is Meta's own attempt, and it is a good start, but it's quite a lonely attempt. You either sit in a room by yourself or you start a meeting and have people join the meeting. But there is an app that fixes the problems of Meta's own app. And before that, whether you're at home or you're at work, one of the problems I'm struggling with right now is trying to monitor everything on my network to know if the kids have switched something off, or if there's internet connectivity issues, or if the Wi-Fi's down, which is more often the case. And if you have a business, well, that's even more of a very expensive tip of a very expensive iceberg. Gary's kind of dying in the sofa over there. Poor Gary, geeky Gary. Well, that is where Pulseway comes in handy. Using Pulseway, you can monitor devices across your network and even have automatic remediation if there are any problems detected. There are integrations with popular services.
Therapy. Wow, my devices. This looks really weird. Wow, my hand is see-through. My phone is see-through, apparently. That's to resume. A mobile app that allows you to manage your business, and one way for sponsoring to use it is called Immersed, and I'm working. Now, first of all, you can now have a screen of literally any size that you want in any resolution that you want, and you can have as many of them as you want. So you can even make them curved if you really want to. So if you're like me, you maybe prefer just one single ultra wide, you can do that. But where Immersed really solidifies its place for me is when you join one of their public areas. Now you can actually sit in this public space as if you were in a Starbucks and get on with your work, but also being amongst other people. That means you can overhear their conversations, you can even swap seats and join in on conversations. And Immersed has controls built into your hand, so you can kind of like D&D yourself so you're not interrupted. You can also change your screens to a smaller screen that you can look over when you're speaking to people, so that's not kind of distracting. I've also met the app's own developers whilst in these rooms. I've even met people who are just shopping online but just wanted to be in this social space whilst doing it. Now, to some people, this might sound to many the hustle of new people even. Now, Waste isn't as good as Meta's own app, though you are given plenty of options to tweak and fine-tune it if you want to. And the hand tracking, as I mentioned already, at times can be very questionable. Now, of course, that probably comes down to Meta's lack of implementation for hand tracking. It's just really not the best. But the one significant downfall of using the Quest for work purposes are, well, that one, it's big and heavy, that can be quite fatiguing if you're using it for long periods of time. No, it's not bad, and it is getting better every year, but it is not yet like wearing a pair of glasses. Not yet. And also, to that point, this big white headset, not really the kind of thing you'd carry around with you and wear in the middle of, an actual Starbucks, but. Immersed is actually coming out with its own product called Visor in early 2024, which does look like somewhat a regular pair of sunglasses. And it's a lot lighter as well. Now, I've no more information on this other than what's shown online as of yet, but I'm hoping to get my hands on a pre-release model soon so I can test this out for you. So subscribe if you want to see more about that. Now, what about gaming and entertainment on the Quest 3 though? Okay, so Xbox's wireless kind of cloud gaming thing just launched yesterday on the Quest 3 headset. So now we're going to give this a try and just see how well it actually performs. So I've got a Bluetooth Xbox controller connected wirelessly through Bluetooth to my headset, and I have this gigantic screen in front of me. Why spend a lot of money on this TV when you could be sitting back and just chill out and have this 100, I don't know what that is, but measuring my virtual screen that you can't see.
134 inches.
So we have a 111-inch virtual screen. For the cost of a Quest headset. So let's just see if this is any good. So first of all, graphics wise, no, I'd say it looks 1080p because I think the screen's just too big as well. I mean, it looks impressive. The only thing is the controls, I think there's definitely some delay going on with the controls there, which might be interesting if we actually come up against somebody. So there's a bit of lag in the screen. Definitely there's some lag in the screen. Straight away, this isn't as good as having a TV. Okay, I'll just say that. But like I said, this is brilliant if you can take it around with you. It gives you a huge screen for no cost, which is quite nice. So first-person shooter games, probably not the best thing. Racing games, probably not the best thing. Things that require quite quick reflexes, probably not going to be the best thing on here. This is either going to be awesome or this is going to be a very, very, very quick game. Okay, this is not good. Is it a real person? It's a real person, yeah. Oh, there's a boss. Of course there's a boss here, and I've just swapped guns with the boss. I'm really struggling to keep up with... okay, I'm dead. Yeah, mixed feelings about this. It is good because it has a huge screen. I wouldn't quite call it a gimmick. I think it definitely has its place. It's definitely useful as long as you're not playing, like I said, games that really require your input controls to be very, very fast. Oh, hang on. Woo! You can change how big the screen is. Oh, that's so cool. Okay, take measure time. Pass the thing up there. There you go, got it. Okay. And then base it down to where the camera is, on the bottom end of the camera. Roughly speaking, it is 77 inches. So the small setting is 77 inches. So the medium size is 93 inches. Okay, so the large size is 114 inches, and the extra large size, oh my god, the extra large size is 134 inches in terms of screen size. So yeah, if you want a massive cinema screen in your living room to play games on, that is quite cool, apart from the fact that the graphics quality isn't the best and the like input lag is quite bad. But let's try Forza Horizon. So we're now playing on the XL screen. I don't think do the graphics change when... I mean, it's seamless to be able to switch between the size of it. I guess it just stretches the image, which is very, very cool. I don't know if hopefully you can see this in recording. So if I get up close, then yeah, obviously it starts getting a bit pixelated. But when you're sat far away from back here, it does look very, very good. But yeah, again, if I get close, then you can start. Oh, starts. Okay. That's about how close you can get to the screen. So that's like, it feels like that's a foot away or so. So you can start like really pixel peeping, but if you sit back at a normal kind of sofa distance, pretty cool. Yeah, it does feel very skittish when playing this. Graphics look great. I mean, the fact is, you have to look around to see everything because the screen's so large. But there's a lot of is it screen tear? Oh my god, this is like uncontrollable. But there's definitely lag. Like if you see the controller, I'm turning it. Right, actually, can you see? There we go. Okay. Yeah, unplayable for those kind of games. Accuracy is much better on this than the last one. Doesn't lose tracking as much as the last one. Although not as good as the Quest Pro. Oh my god, this is a lot. Oh, okay, well that's difficult. Done. So I saw there were some optional hand straps you can get for these controllers. 1000% I'd recommend getting those. So even if you like momentarily forget to hold on to your controllers in a moment of stupidity, your TV will be safe, so will your wife and kids. That wouldn't be good. Now watching content on this headset in general, it's okay. Like, I mean, it's definitely an improvement in the other headsets I've worn. The picture, the audio quality is also pretty good, like way good enough to be able to actually enjoy the content. Now I have seen people who have been like washing dishes whilst watching a movie or something like that whilst wearing the headset, and it is sort of okay to do this, but it does still mean that you're wearing a fairly bulky headset. And if anyone else walks in on you in the middle of washing dishes and you kind of got wet hands, that's not going to be a very comfortable conversation when they can't see your face and you're just wearing this, just white mask on your face. Now that is something that Apple's Vision headset seems to have addressed with this fake eyes or kind of camera filming your eyes that then produces it on the screen on the outside. So I'm of course I'm not quite sure what that will look like in reality. Now I think the Apple Vision is probably actually the most excited I've been for a piece of tech for a very, very long time. Certainly going to be trying it out next year if I can. Apple just has a history of taking existing products, like VR, like mobile phones, like tablets, and just turning them into something much, much more. Again, you've got the iPhone, the Apple Watch, the iPads. Even though they are technically slower to adopt newer technology, they are always at the forefront when it comes to innovation. So it's going to be interesting to see what Apple's first generation headset is like when the likes of Meta have been doing it for literally years already. Now, one area that we all know Apple can't really compete with, well, not just yet anyway, is gaming. And my God, playing Half-Life Alyx on the Quest 3 via Steam Link is incredible. That scared me. Oh, here we go. Reload.
Compliments of the chef. Oh? He brought home the bacon with the hundreds that he saved on car insurance with Geico.
Oh, reload. Like Half-Life has always been one of my favorite games from way back when. So to experience Half-Life in VR, in pitch black rooms where you can hear the face huggers like scuttling around your feet, where you've only got a torch and a pistol, and whilst also trying to avoid those long tongue things dangling from the ceiling, horrifyingly exciting.
These are disgusting. Like, look at that. Honestly, like, really?
I know this word gets used, far too often, but if you want to test how immersive something is,
but this is like, honestly, like the graphics in this game, the detail on the hands, on the gloves, on the fingers, like look at that. It's just insane.
Try playing this game. It is freaking scary at the best of times. What can be improved? Well, still the overall size and weight of the headset is just too much. Like, it's big, it's bulky, and whilst it is comfortable for short times when you're playing games and things, it's not like you could walk around, all day wearing one of these. We're kind of on this road right now where the Meta glasses and the Meta Quest are getting closer and closer to each other until we hope to reach this, equilibrium where they become one product, which looks like a regular pair of glasses, but performs like a Quest headset. And speaking of which, the pass-through image clarity still needs some work. It's way, way better. Like, it's getting better with every iteration. I'm really pleased to see the that this time we get full color pass-through, and it is pretty good when looking from a distance, but when trying to read things up close, like your phone screen or laptop, it kind of works. It's just not really that possible. The clarity isn't there. And as with everything right now, as we're doing right now, battery life just isn't good. Even for a VR headset, like we've been shooting this video for the last hour or so, and the battery's basically dead on it already. Like it could do with an extra 1 to 2 hours of regular battery life. So I would definitely recommend getting a head strap with like an extended battery to help you play for longer if you want to. Otherwise, this is a solid headset. And if you're considering getting one, I'm sure you will be far from disappointed. Now, a huge thank you to our Patreon subscribers. You can catch the after show right now on Patreon for an extended look at the Quest 3. It's just something we've started up, so I'd love to see you there. Until next time, cheers, bye-bye.
VR has been going. Having missed it because some of the biggest innovations have been so very small. And sure, the Silicon Valley vision, of an AR headset that's integrated into every aspect of my life sounds cool, but man, I just want to be super immersed in my video games. And the Big Screen Beyond 2 may be the very best way to do that. Let me put it this way. I can't see for shit. The Beyond 1 was so much better than my aging Valve Index that it literally reignited my personal excitement for VR. As for the sequel, somehow, in one short year, they've made it so much better that I now feel bad for anyone who jumped on the first one. I'm talking dramatically improved optics,
multi-user friendly design, optional eye tracking.
And somehow it does all of that while being even lighter than before.
And now for a light segue from our sponsor,
MSI. Their MPG 272 URX QD OLED monitor comes packed with features with a 240Hz refresh rate and support for DisplayPort 2.1.
More stylish.
It's all relative. And what I can see is the improved optics. The pancake lenses in the original Beyond, they were impressive for their small size and weight, but they struggled with a number of issues that, combined with some usability quibbles, ultimately led to me abandoning my original Beyond in favor of my Index, in spite of its lower resolution. First, there was the sweet spot, which is the area of the lens where the image is the sharpest. It was so small. And outside of it, things got pretty blurry pretty quickly, with some gnarly chromatic aberration sneaking in near the edges.
The bigger issue, though, was that the multi-layered optics caused a pretty distracting lens flare in high contrast scenes, or even moderate contrast scenes with high brightness. It's one of those things where it's absolutely a champagne problem, but damn it, this is expensive champagne. And at this price, there should be nothing to break my immersion.
And somehow, despite them keeping form factor the same, all of that is resolved on the Beyond 2. I can pick out the lens flare if I'm looking for it, especially in a menu or something like that, but in game, it's almost too good, too immersive. Especially one like this. Ah!
Which is impressive knowing that they have the exact same 2560 by 2560 micro OLED panel that's found in the original Beyond. This is all just improvements to the glass. We didn't even mention that they've improved the FOV at the same time, going from 102 degrees to 116, putting it in line with competitors that are much bigger in size. Ah! There are still lingering issues with pancake lenses in general, like reduced brightness.
Apparently, the panels that are in here are supposed to reach as high as 3,000 nits. By the time that light reaches your eyes, it's more like 150. That's a yikes.
But it matters less than you might think, thanks to the excellent light seal that you get from your custom face cushion that Big Screen manufactures using a 3D scan of your face. They're super cool. They're 3D printed out of a TPE-like material that has magnets that click onto the headset for a perfect seal. Improvements to manufacturing have the new
It's happening! We're getting smart glasses with displays in them. Full color display box.
We got the distinctive camera and capture LED. This is actually the LED and this is the camera, although when you look at it, it's kind of hard to tell. You get mesmerized. On the top of the glasses, we have a capture button on this side. And over here, we've got the speaker vent and another one on the other side. On the bottom there is where the actual audio from the speakers will go into your ear holes, not the other parts of your ear. And it's kind of hard to see here, but we have 5 microphones, 2 on this arm, 2 on this arm, and another one at the nose. So just under the left hinge of the glasses is the power button. It's like a toggle. And then kind of the star of the show here is the actual waveguide display. You can kind of see the elements of it here on the left side. Sort of, you see those little lines? You'll notice that it's only on one of the lenses. That's because the display is actually in that lens only. They're not trying to completely take over your whole vision. They're just trying to help. And lastly, on this side, there's a touchpad. It's actually an XY touchpad, so you can swipe up and down and back and forth. And this is there so that you have another option to control the glasses, because the primary way that you're supposed to control them is with this, the Meta Neural Band. The Meta Neural Band is something that Meta has been doing research on for a while, and they've kind of given updates on occasionally. The idea is it's a wristband or a bracelet with sensors inside that can tell what you're doing with your fingies. This uses electromyography, which basically will sense the neural signals being sent by your brain to your muscles. It's not detecting the changes in your muscles themselves. It's kind of like catching them on their way and being like, oh, okay, I see what you're doing there. You want to turn the volume up. It's apparently supposed to be snug on your actual skin so that it can detect those signals. If it's loose and it's flopping around, it's not going to detect anything. And then there's also a charging cable in there that doesn't appear to have a port on it. It just goes on forever. So it's a charging pad. It's a USB-C to a magnetic charging pad. I should have put that. I can do it. It's not worth it. Oh, there it is. Oh, I didn't even see that there's like a little button on this. There's a button, maybe for pairing, maybe just for fun. Start with your glasses first. They're like, what are you doing here? Not yet. To use hand gestures, slide the band onto your writing hand, because one of the things you can do apparently is handwriting, but not yet. That feature is coming in a little bit. All right, I'm hooked in. I'm ready to jack into this metaverse. After this word from our sponsor.
Thanks to Secret Lab for sponsoring this video. If you don't know about their Magnus Pro, it's the creme de la creme of sit-to-stand desks. A full metal desktop and capacitive touch control pad screams premium, but it's not just looks.
First off, seeing that they flex out a little bit is very nice to see. Some of those like early adopter display glasses, kind of forgot to give it some of the nice to haves of just regular glasses, and it's nice to see that we have that here. Okay. Oh, and there it is. Continue setup in the mobile app. I can see the display. It's right there. It's about, I actually don't know what the borders are. It could be infinite. It's not infinite. Tour is in progress. Oh, I might need to do that part again. The music is still going. The music is playing. Okay, swipe down to the Photos app. Swipe. Swipe. Okay, this is crazy. Is that something else now? And now it's playing in here. Okay, so the system got a little confused because as I was like pressing the primary kind of activation thing, tapping the glasses, tapping your finger, it was playing music. But now we've closed the music app. We're by ourselves now. It's a safe space, and we're gonna redo the tutorial. Here we go. Hey everybody, let's learn how to properly wear the band for gestures. Select your writing hand, right? Yes. Wear the band correctly. Done. You gotta make sure the line is facing you. And I was like, where's the line? It's like, oh, it's hiding, okay. And now, capture life's best moments. And this is one of the really cool things. You get a viewfinder. So with the other glasses, you're just kind of trusting that the frame is okay, but this is like showing you what you're actually capturing. That looked normal, probably. Tapping your index finger like this is like a left click on a mouse. Tapping your middle finger is like a go back button almost. Double tapping is gonna send it to sleep or wake it up. And then you have your touchpad is this. You swipe to the left and swipe to the right. I gotta say, the fact that I'm using my hand as a control surface. And then of course, my favorite thing, pinching and turning down and up, that can change your volume. It feels a little bit like I'm giving someone a purple nurple, which I feel like, I don't know what they could do about that. What else would it be? Like, they can't make it this, because that's not enough, like, neural signals. Maybe eventually, but is this better? A little bit. So now that I understand the gestures, I can navigate the interface here, which basically consists of 3 main screens. You got your kind of central main screen. If you swipe to the left, you got your control center. It's like your quick settings menu in Android. You got a music shortcut, camera, captions, shortcuts, a volume display, brightness, and then you can set things to be audio only so you don't use the display. There's a do not disturb option, and then you can go to the settings from here. And on the other side, you got your app list. WhatsApp, Instagram, Messenger, and Messages. Those are gonna be the actual integrations you can use with this thing if you wanna use it as like an extension of your smartphone. Now, I'm interested in the captions thing. Right off the bat, I'm gonna jump into that because I just love that. I am someone who struggles to pay attention, and if I have a way to kind of double check what someone just said, that would get me out of 90% of the problems I find myself in. But it's also a great accessibility feature for people who may be hard of hearing. For the best results, face the person who is talking.
Hey Riley, really excited for our trip to Portugal together. I think the wives will have a blast, and we're gonna have a great time just hanging on the beach, having some Mai Tais.
Just hanging on the beach, I was in my ties. But everything else, it got just perfectly. It got a little confused.
Hey Riley, it's me talking again. I'm just speaking, and I'm gonna keep speaking, and you can't stop me from speaking because I love to do it. I love to yap. And you know what? Oh, basketball season starts today.
Okay, that's interesting. So even as I turned away from you, it's saying, okay, the voice isn't coming from that direction anymore, but it knows that it's a continuous sentence. It knows that someone is still talking, the same person who was just talking. And then when you paused, it was like, all right, now I'm not gonna pick up on there's no one in front of you now. So that's probably just background noise. I honestly like the way that functioned. That seems to be how it's supposed to operate. The only issue I can think of is that if you're like walking beside someone and they're talking and you wanna see what they're saying, you kind of have to like face them the whole time. So you're like walking down the street and be like, really? Interesting. You know? That might be a little awkward. Live translation, French to English.
Bonjour Riley, je m'appelle Jake Bellavance. Comment ça va?
You said killer ideal and it said killer ideal. But I'm in live translation. Boom. Can I go to the bathroom? Hello, Rally. R-A-L-L-I-E. My name is Jake Bella Vans. That's cool. When you started speaking English, it just started transcribing in English. So I think that's why I was confused whether it was in the translation mode or the English mode. Because I think it was like, yeah, we're doing French to English, but now someone's speaking English, so I'm not just gonna like not transcribe that, you know? That would be rude. What I like about the display though, is I like that it's down here. So this is it's taking up like this much of my field of view, and I like that it's not like up or something. There's been some of the glasses where you have to like look up to see the display, and I feel like when you're talking to someone and it's like, yes, I'm listening to you, I care what you're saying. What? I feel like this is better if I'm like, I'm listening to you, and I'm just looking over there I just saw something interesting over there, and now I'm looking back at you. But there's nothing interesting up here. Okay, captions are cool. Live translation is cool. I can say without a doubt that yes, there's some hiccups with kind of like learning how to use it, but that was the smoothest experience that I've ever had with one of these smart glasses that do live translation. We've done a few of them now on Short Circuit. That was smooth. There's a little bit of confusion sometimes if you move too fast and you're like doing one gesture and then another gesture right away. We're not really at Minority Report kind of levels yet where you can go like super, super fast. You kind of have to reset and then pinch and then zoom out and then tap middle finger to go back. One thing to note about the camera is that the resolution of photos and videos are slightly lower than on the non-display equipped version of these, which again has the name reversed. So if you are getting these primarily for its ability to take photos and videos and you want the highest resolution, that's just something to be aware of. The next coolest thing to me about these is maps. It knows which way I'm facing. This is not Google Maps. It's their own thing, so all of the niceties of Google Maps might not be there, but I'm gonna see what it says if I say directions to Shoppers Drug Mart. That's a Canadian thing. Oh, there it is. Okay, click it. And then it's giving me directions.
Okay, all right. Well, that was pretty cool to watch. What I kind of want to show you is a Google Notebook LM. It's actually really cool if you don't know what it is. Essentially what it does is it will take any document and actually give you a presentation. So what I'm going to do is show you how this AI was able to take a analysis, for example, of from what Amit has done, and put that into almost a presentation. And so I'm going to share that with you. I'm going to share my screen and just play it and just show you how that works and how that looks. So here I was able to take that document. I gave it a document or copy and pasted words, and then it's going to do an analysis on the company. So we're going to watch it. It's a 7-minute analysis on Grab, Southeast Asia Super App. So let's go on.
Hey everyone, and welcome. Today, we're diving deep into Grab, Southeast Asia's super app. And really, the big question on everyone's mind is this. Is this a misunderstood tech giant that's just about to take off? Or are the risks simply too high? Well, we're going to unpack the entire investment case right now. You know, to really get Grab, you have to get its founder, Anthony Tan. I mean, this isn't just some corporate story. It's a story of incredible personal sacrifice. He literally chose his vision for this company over his family's business, a decision that created a lasting rift with his own father. That kind of conviction, that's just baked right into the company's DNA. Okay, so here's how we're going to break this down. We're going to look at Grab's journey from a simple safety app to a super app. We'll analyze its financial turning point, explore some of those high-margin opportunities, and of course, we have to weigh the risks. And finally, we'll tackle the big question, what is this thing actually worth? So let's start at the beginning. How did Grab get to where it is today? Now, you might think, oh, they just copied Uber, right? But that's not the whole story. The reality is it started by solving a really fundamental, very local problem, safety. Yeah, and this timeline really shows you that evolution. It was so calculated. It started back in 2012 as MyTaxi, just focused on making taxis safe. Then, boom, rapid expansion. But the 2016 launch of GrabPay, wow, that was the real masterstroke. It basically laid the tracks for everything that came next. And the checkmate move, that was acquiring Uber's entire Southeast Asian operation in 2018. That move effectively ended the ride-hailing wars in the region. Okay, so that brings us to the core argument for why we're even talking about Grab right now. The thesis isn't about what Grab was, but what it's becoming. It's all about this critical turning point, this inflection point in their financial story. And this slide, this just nails it. It's the whole story in one picture. For years, Grab was all about the classic tech playbook. Burn cash, grow, grow, grow. Kind of like an early Amazon or Uber. The entire bet here is that the left side, that's the past. And the company is making this hard pivot to the right side, to sustainable profitability. And the argument isn't that this is some 5-year plan. It's that it is happening right now. So let's just boil this down. What's the core thesis here? You've got a dominant player in a huge growing market. Nearly a third of its value, it's just cash sitting in the bank, which acts as a nice safety net. And its profitability isn't just getting better, it's accelerating and fast. For an investor, this creates what they call an asymmetric opportunity, right? The potential upside just looks a whole lot bigger than the potential downside. But here's the thing. The real long-term story, the one that gets investors really excited, isn't just about rides and food delivery. It's about building these brand new, high-margin businesses right on top of that massive network they've already built. Okay, check out this donut chart. This shows the advertising piece of the puzzle, and it's wild. Grab has 6 million merchants, but only 3% are actually paying to advertise. That's like if Google only had 3% of businesses using Google Ads. That huge untapped 97%, well, that's a massive runway for some seriously high-margin revenue. And that synergy gets even crazier when you look at financial services. I mean, the COO basically says their cost to get a new banking customer is almost zero. They're not out there spending millions on ads to find new customers. No, they're just converting the people who are already using their app every single day. That is a huge advantage when you're trying to build a profitable digital bank for the region. So you take all of that, the scale, the cash, this whole ecosystem, and what you get is a really powerful competitive advantage, what investors love to call a moat, right across one of the fastest growing regions in the world. In the competitive landscape, it kind of looks like what you see here. Grab is the big, well-funded skyscraper. It's got the brand, it's got a massive $7.6 billion war chest. Local competitors, they're scrappy, but they just can't compete on capital. They literally can't afford to burn money on subsidies and marketing the way Grab can. And Grab's management, they're not shy about this. They're very clear on their strategy. The CFO basically said, look, competitors will come and go, we're not worried about them. Their focus is on using their scale to make sure their prices are good and their selection is the best, because they believe that's the key to keep growing their user base. Okay, but it's not all sunshine and roses, right? No investment is. A complete analysis means we have to look at the other side of the coin, the bear case. What are the big things that could totally derail this growth story? So what are those key concerns? What are the things that keep investors up at night when they think about Grab? The source material lays out a few big ones that you really have to understand.
All right, so the risks really fall into a few key buckets. First, you've got macroeconomics. If Southeast Asia hits a recession, consumer spending is going to get hit hard. Second, regulation. You never know when a government might change labor laws or hit them with antitrust stuff, and that could completely upend their model. And finally, there's execution risk. As they jump headfirst into banking, they're building up this huge loan book that's never really been stress tested by a big downturn. If loan defaults start to spike, well, that could get very painful very fast.
Okay, so after all that, let's try to put it all together and talk about valuation. How does the author of our source material think about this, and what do the numbers suggest for the future? When you start to look at Grab's valuation, you absolutely have to start with its balance sheet. The company is sitting on $7.6 billion in cash. Just let that sink in for a second. At its current valuation, that means almost a quarter of what you're paying for a share of Grab is just for the cash on its books. For a lot of investors, that's a pretty significant safety cushion. So the author lays out this kind of hypothetical path to a $10 stock price. Now look, this isn't a guarantee, it's not a prediction, it's a model to show you the potential. It basically assumes they keep growing their earnings super fast, that the market gives them a valuation multiple kind of like their peers, think Uber, and that they keep adding to that big cash pile. If, and it's a big if, but if they can pull that off, the math suggests the stock could more than double from where it is today. And it's not just us or some analysts noticing this. When a legendary value investor like Howard Marks, a guy who is famously skeptical of these high-growth tech stories, starts buying up millions and millions of shares, well, that makes Wall Street sit up and pay attention. It's a huge signal that maybe, just maybe, the story is changing. So, what's the bottom line here? What's the big takeaway? After all those years of burning cash just to win the market, it really does seem like the pieces for profitability are finally falling into place. So the question for you, for any investor, is pretty simple. Do you believe management can execute this final turn? Can they actually convert all that market dominance into real, sustainable profit? That right there is the multi-billion-dollar question.
That right there is pretty impressive. So this entire presentation was created using Google Notebook LM, and the fact that all I did was kind of give it a little bit of instruction, what I'm looking for, and I gave it I want a deep analysis of the company. I didn't give it the logo, any of the art. Maybe I decided on the type of style that I wanted to do, but the rest was done all by AI. So this is what, when people say, well, AI is replacing creators, this is exactly what they mean. Because you have this entire presentation that was just created using Google LM. And at the end of the day, who really owns this? Is it me or is it Google? Because they technically created it. I was more of the idea person around what to create. So it's definitely like a discussion in the future of who really has ownership of this kind of stuff. But it is pretty impressive how AI is kind of replacing how people work. So if you want to create one, the way you would do it is like this. So you would get the data that you need. So you get the data that you want to discuss in your AI, and what you would do is you would post it into the AI, and then you would kind of give it some notes of how you wanted to cover that information. So here is my grab analysis that it just did, but I want to create a new one. So you can add different sources if you want to, or start from the beginning. So what I'm gonna do is I'm actually gonna create a new item. I'm gonna input a text. You can input a couple of different things. You can upload a source, you can input a text, you can grab it from Google, you can grab it from YouTube. But what I'm going to do is I'm going to grab the information that I want, and I'm going to click next. And when I do that, what the AI is going to take, it's going to take that information I just provided and start generating really useful actually data points. For example, I can tell it, okay, for Nebius, for example, that's the AI Revolution meets NeoCloud Deep Dive. It will create a mind map of understanding of what the DD is on the company. For example, here's Nebius Revolution meets NeoCloud Deep Dive. So investment thesis. Then it breaks that into very useful topics. So the analyst position, AI data center industry view, reason Nebius caught attention, and entry strategy, sell puts a 98. And so you can click into each one, and it's going to break down each of those theses on, and then you can kind of just say, well, does this thesis make sense? So it's a good it's a quick way to kind of get an understanding of key points by summarizing, okay, what you're interested in. He has the bull case, key strategic strengths and executions, and then he breaks down each of the sections, and then you can have more understanding of each section by breaking it down into even further into their each branch of this mind map. So pretty cool. I really like how they have been really creative in this way. That's the mind map, but also beyond the mind map, I can create a video as well. So the way I would create a video is I would have it so, you know, I could choose anything here. I can make it so it's a whiteboard. I can have classic. I can have auto select what they make. I can have it in different languages as well. As you can see, here are all the different languages. I can have explainer or a brief video. I can have the different types here. You get anime, watercolor, retro, heritage, papercraft. So what I'm going to do for this one is maybe watercolor or anime. Anime could be interesting for Nebius. Retro print. Retro print looked pretty cool for Grab. So maybe I should do... What selections do you think I should do here? Papercraft. I think I might do not white paper. Let's go with anime, as this can be no watercolor. I'm gonna stick with this feature here. I think it's pretty cool way to explain it. So here's what I'm having the AI kind of create. So create a visually engaging and analytical rich deep dive into Nebius Group based on the provided source. Highlight the company's origin, the business, the competitive advantage, financial performance, strategic partnerships. Use bold sections, headers, bullet points, and create charts where appropriate. Emphasize impact of the Microsoft contract, the full stack infrastructure approach, and the comparison to CoreWeave. Include the valuation breakdown, make it suitable for investor analysis, tech-savvy readers who want to understand Nebius' role in AI infrastructure revolution. So that's the analysis I need the video to be on. And so once I click a go, it's gonna load up, and eventually we will have a video analysis of video presentation of the company in that specific style. So that's literally it. And it's pretty impressive because a lot of people are able to do this with just a click of a button. I could have had the video done by now if I wasn't explaining it, but it took me 10 minutes to get to this point. So this is where AI really does in reality replace a lot of people in the way they do things. People that have to set up presentations and everything, that have to set up presentations for different companies. But now imagine the business that can be built on top of this. Let's say you create a website, and this website is on the back end, runs on this platform. And what it could do is users can log in, and it will help them do a deep dive on any given company. And all they have to do is give a ticker symbol of a company. And what the site does is goes out and gets the data and then finds the best due diligence on a company and breaks it down for the user and kind of creates like a short 7-minute video presentation. And so it might be called the best deep dive stock analyst or whatever, because companies pay, a whole bunch of money for analysts to look at a company and give it a buy, sell, hold rating. And a lot of times now those kind of people are getting replaced by this AI that can do it in 5 minutes, gather their important sources from online, and put together a good structured analysis of any company. For example, like creating this didn't take long. I can also do a report, and this report will be like a report based on your source, and it's going to be a deep dive, rich report on the company. So create your own report, brief document, study guide, blog. You can do a studio audio review. With the audio review, you can do briefing, critique, debate, a thoughtful debate between two hosts, illuminating the different perspectives on your source. You can make it long, you can make it short, and you can also have them focus on specific thing within the document that's going to make the analysis even better. The cool part about this is you can actually engage with the agents that are discussing back and forth and having this debate whether the company is worth investing in, if the due diligence is actually good. So as the agents are going back and forth, you can actually speak and say, I have a question, and they will stop and they'll say, what's your question? And they will respond to your question between them in a very thoughtful way, and then that way you can just make like a good well thought about understanding investment on the company. So that's pretty impressive. So AI really is replacing so much, and I don't think I'm gonna have it create one, but if you are interested, you should definitely do one of these. I can drop the link in this video if you want me to, but I'm gonna end up creating this. I'm gonna drop it on my YouTube video. Make sure you subscribe. I'm gonna be posting more videos. I think I've gone live at least 4 days in a row now, if not longer. So if you want something like this, totally let me know. I will definitely drop it in the link here. If you have a stock that you want me to review, totally let me know as well. Leave the ticker symbol here, and I will do my own due diligence on the company for you. So what I'm gonna, and I've already actually make sure to subscribe because I've already posted the video about Grab, the AI generated due diligence video about Grab on the site as well. I'm gonna probably do 2 due diligence videos, deep dive videos on stocks every single month, as Amit produces these due diligence videos on a monthly basis. But now that I've covered that, we're gonna continue the rest of the video. We're gonna be looking at this video here. We are seeing something that I've noticed is, he did. If you own, okay, we might actually watch this video on AMD, because AMD is reporting on Tuesday, and I think it's going to be important to just see what analysts or YouTubers are saying, and then we'll get into this video on Tevis covering what's going on with stablecoin Ethereum demand in the industry. So let's get into this one, and then we'll go into this one. If you have anything you want me to cover, let me know. Make sure you subscribe as well, because I'm always posting stuff. So let's get into it. Well, obviously after this ad, YouTube, by the way, did lose major partnerships in like sports TV, and a lot of those partnerships moved on to new competitors like Fubo.
Time, I mean it. You guessed it. This week we do have earnings, and on today's episode, we're going to take a closer look at everything that you, as an AMD investor, should know before the company reports on Tuesday. So let's take a closer look in today's episode. All right, so first, a quick price target action. We can see right now the stock is sitting at $256 year to date. The stock is doing amazing, up 112% with a market cap of $415 billion. And on today's episode, we are going to take a closer look at what the market's expecting, and what are some of the recent things impacting the overall stock, and what are some recent earnings that can give us some indication of how AMD could do during these earnings. But like always, if you want to get great charts, make sure to check out fiscal.ai/Jose to get all these great charts. If you're curious, for example, about revenue expectations for this upcoming quarter, we can see the market is expecting roughly $8.75 billion in revenue, and for guidance over $9 billion, closer to $9.2 billion. You can kind of look at all these things like earnings per share, forward PE ratio, and this is a platform I use on a daily basis. So if you are a long-term investor, make sure to check out fiscal.ai/Jose. Now, I've created a pretty cool slideshow, and I hope you guys enjoy it. Here we're going to look at everything that the market is expecting for quarter 3. So first, like we saw from fiscal.ai, revenue is expected to be $8.75 billion. And that's roughly 28.3% year-over-year growth and 13.6% sequential growth. Now, earnings per share is expected to be $1.17, up roughly 27.2% year-over-year, and up a crazy 143% quarter over quarter. For those that are not familiar, last quarter we did get hit by inventory charge due to China products not being able to ship and writing off of inventory for the MI308. Now we're kind of normalizing that, but because of that, we are going to see a nice sequential growth in earnings per share. Yet regardless, we still see a nice year-over-year growth. Now, in terms of the segment and how it's expecting, the overall gaming market is expected to be $1.05 billion. That's up about 127% year-over-year. The client market $0.6 billion, up about 38% year over year. The biggest one is data center, which is expected to be almost $4.2 billion with about 18% year over year growth. And the embedded market is expected to be $900 million, short of the $1 billion mark, and closer to a decline of 2.5% year over year. Now, a few things that stood out: gaming and client, right? Those markets are definitely picking back up. The embedded market, while it's it's not in the green, it seems like there has been some form of flatlining happening here, which I do think it's pretty impressive, right? It's no longer going to be bleeding. And once this market turns around for AMD, this is a massive cash flow. Now, overall, we're going to see that the data center market is roughly 50% of total revenue. And that's the market that analysts are going to be extremely extremely critical on. Now, stock performance, the stock is doing amazing, up 112% year to date. If you are a semiconductor, if you are an AMD investor, congratulations. This stock has done really well for you this year. Massive strong buy analyst consensus. 30 out of 44 analysts expect this to be a buy right now. Now, before we go any further, if you are serious about the AI market, about the semiconductor market, make sure to hit the subscribe and thumbs up button. I'm trying to hit 85,000 subs by the end of the year, and this is going to be the best place you're going to get that information in video form for free. Now, if you want to elevate your AI and semiconductor knowledge, make sure to check out the community. I just built it, and because I'm just building it, I've created this founding member offer where you get 50% off your annual subscription. The community has grown so quickly. We are up to 80 members in less than a week, and once we hit 100 members, I will start cutting off this founding member offer. So right now, 50% your annual subscription, as long as you use the slideshow, $9.6 billion in revenue. That represents a 25% year-over-year growth and a 10% sequential growth. There are three main drivers anticipated for this strong guidance. And this is what the market is going to see, right? If we get better, if they come out and say, look, $10 billion in revenue, which could be possible, depending on the strength of the MI355, that would create a massive bullish sentiment for the stock. Remember, this quarter, we are expecting roughly $8.75 billion. By next quarter, we're expecting closer to $10 billion. And there's continued AI and data center momentum, which is obviously going to be pushing off to the AMD's MI355 and their EPYC Turing CPUs. We're also seeing some strength in the AI PC market for the client space and the gaming space, and that's also creating opportunities here for AMD. Now, in the past few months, we've had 5 recent updates that I think every form of investor should know. The first one is that OpenAI partnership, right? The transformative 6 gigawatt agreement to deploy AMD Instinct GPUs, with the first one starting in the second half of 2026 with the MI450. And the CFO mentions that they expect to deliver tens of billions of dollars in revenue with this partnership here. We would love to get more insight about this, right? Unfortunately, the real revenue isn't going to start into the second half of 2026, but at least some clarity of what type of numbers we can actually see. If they give us some strong guidance, yes, next year we're going to see some strong numbers of 10 plus billions of dollars just in the third quarter, right? I think that's what's going to be crucial with this OpenAI partnership. We already know it's happening, but investors are going to be curious of how much it actually means, right? It's a number that analysts are going to want to put to project future price targets. The second one, which I think was also pretty impressive, was the Oracle GPU deployment. So Oracle to deploy roughly 50,000 MI450 GPUs on their Oracle Cloud infrastructure starting in quarter 3 of 2026, with partnerships extends to 2027 and beyond. Now, these two partnerships, in my opinion, if they succeed, is what helps AMD become a $1 trillion company. And for me, this might suck for most investors. I honestly don't care what happens this earnings. To me, these two projects, which are expected in the second half of 2026, are what are gonna help AMD become a $1 trillion company. If from now to then we get a massive volatility wave, I'm okay with that. If we get a massive sell-off, I'm okay with that because I will most likely purchase because of these two partnerships right here. I think these are what's going to make AMD investors extremely rich in the future if everything succeeds as plans. Now, there are 3 other updates. Third, CT System divestiture happening. So they completed a $3 billion sale of the manufacturing units of CT Systems. This is pretty good. It's going to be a nice amount of money coming in here for AMD, where they will be able to invest back into research and development. The fourth thing was Helios Rexscale. At OCP, AMD showed a standing Open Rexscale AI with Helios, and this showcases that AMD is ready with the system, right? They're moving in the right direction. It's not just hopes and dreams. There's an actual product behind Helios. And number 5, which is also another interesting one, is US Sovereign AI. There were a few supercomputers that were announced by the Department of Energy, Lux with the MI355 for early 2026, and Discovery with the MI430X for the Department of Energy sometime in 2027. So overall, we continue to see nice partnerships wins, which are all going to bring a nice amount of money to AMD. Now, we also did have earnings. Big Tech had earnings, and we also had Intel and TSMC report earnings. This is what investors should learn about it. So Microsoft, all 4 companies, Microsoft, Amazon, Alphabet, and Google, either increased their total capex or mentioned that next year capex is going to be much higher. So while not every one of these uses AMD as AI accelerators, all of these do use it for their CPU product. So at least that's the first tailwind there. The second one is Microsoft and Meta do use AMD as AI accelerators, so you have that opportunity there. Now, Microsoft also shared that there is some strength happening with the AI PC market, and that overall can help AMD in their client side, as well as obviously they have the Ryzen CPU that is very, very popular in that market. Now, with Amazon continues to use AMD for the EPYC CPU solutions. We still haven't seen a massive win in the GPU there, but that's obviously an opportunity in the future. Alphabet, very similar. Alphabet increased their overall capital expenditure, and all these players mentioned that they need more capacity, more compute, because they just have crazy, crazy demand. Now, unfortunately for AMD, Alphabet is very similar to Amazon, where they're mainly usage of their CPUs, but it does open up the opportunity if the accelerator market ever enters into Alphabet. Finally, Meta is a heavy user of the MI300s. Would love to hear any clarity on the MI355s, how many are shipping and stuff like that. But overall, the sentiment for the overall AI market is still extremely, extremely bullish. So the big picture for AMD shareholders, hyperscaler capex is not slowing. Now, vendors mix matter because they all have their own unique usage of AMD, but overall, all of them are going to be spending either more money on CPUs, which is still a very, very strong market for AMD. Now,
write this date down, October 28th. That's when NVIDIA's silent partner could shock the world. You see, NVIDIA.
I also mentioned that TSMC and Intel reported earnings, and they did share some great insight. Now, TSMC mentions that the AI accelerator market is still expected to grow roughly 40% in compounded annual growth rate for the next few years. That's extremely bullish for AMD's MI400 series, and Intel gave a lot of bullish signals, in my opinion, for AMD. Intel admitted that they're in supply constraint nodes. They're supply constraint on their 10 and 7 Intel nodes. AMD is going to take that opportunity to get more market share from Intel. The second thing is Intel mentions that their 18A yields are adequate, but not yet margin appropriate. This gives Intel a lot less wiggle room on pricing power and gives AMD the ability to, even if they lower ranks, they still make money. The final thing Intel mentioned is they're redirecting wafers to servers, creating client openings. Again, Intel is supply constrained, and this is going to allow AMD to continue to get more market share in both the server side and the client side. So I'm pretty excited for earnings, and these are the things that I'm extremely curious about. First and most important, obviously, is the data center GPU shipments and backlogs. Unfortunately, usually Lisa Su doesn't give us the full picture. I hope she gives us a full picture this quarter. Updates on the ROCm software traction. We're definitely hearing a lot of great movements there. The EPYC CPU, what's going on with there? We continue to win market share. Is that still a story? I believe the answer is yes. The AI PC market for the consumer, how is that moving? Are we winning market share? I think the answer is yes. Any kind of insight in the supply, in the kind of the supply chain line for AMD and how that's improving and what are some of the constraints? So all this, in my opinion, is crucial for AMD shareholders. Now, I do believe AMD will outperform in forms of what the market is expecting, but how the market or the stock price will react, that's a completely different answer. Anything can go. Now, like I mentioned earlier in this episode, because of those two partnerships with OpenAI and Oracle, I believe this could be $1 trillion company. So even if there is a sell-off after this massive run-up, in my opinion, it would be more of a buying dip for me to increase my position on AMD, because the long term is there for the patient investor. So I hope you guys enjoyed today's episode. Take care, have a good day, and see you all next time.
Yeah, I totally agree with him. I think AMD is gonna be like just one of the, like, nobody's really looking at the company of competing, or not actually in some of the products actually competing with NVIDIA. Obviously, it's not gonna just do that right away, but it's gonna take some time. But the way that AMD is going about things is from more like an Android perspective, where it's an open system. People can develop their own products off of it, and they have this thing called chiplet infrastructure architecture that allows for a better way to actually build out these AI data centers and be able to connect multiple chiplets together to build out the best AI chips. And so unlike NVIDIA, they have more of like closed system in a way like Apple, and so which is a little bit different. It does the job and is winning right now, but in the long term, I think allowing developers to be able to develop on top of the chips and allowing them to quickly remove and put different parts together to create the best chips that can generate the best outputs for specific criterias is the best way to go for developers, especially in the world of AI where the use case is so diverse. So I can see AMD just really being the queen in the industry, because right now NVIDIA is just at the top of the market. Their products is in demand, but because their products in the demand, they're at the top of the market. They can hike the price of their products as high as they can, but at the same time, that's not how companies want to operate. Companies like having competition. Facebook wants a competitor against NVIDIA. Meta, they want the same thing. Meta wants a competition. Just the U.S. government in general wants a competitor like AMD, because they don't want all of the largest companies to be under one company's products, because that creates a problem. A good example was when SpaceX was literally one of the only companies that is launching products to space, and then Elon came out of nowhere and said, "Oh, we're gonna stop, we're gonna close down SpaceX," and then that gave room for other companies to come in and say, "Okay, you're gonna threaten the United States with your words. Well, what we will do is we will come up with Rocket Lab, AST, Rocket Lab." Those companies really took off a lot significantly and created demand for the market, because literally America was dependent on Elon's SpaceX to do a lot of the commercial business. So at the end of the day, I see the same thing in this industry. We're going to need a company like an AMD to be able to compete in the same way against the kind of like a monopoly that NVIDIA has at a market cap of almost like $5 trillion, a little bit over $5 trillion. Let's go ahead and now
Hello, traders.
Get into the next topic, which is BMNR stock and how the need for tokenized stocks, USDT tokenized US dollar is going through the roof. So here Tevez is going to be covering that. So let's check it out together.
And the Ethereum ecosystem as a whole. And over the past month, every single week, I've been recapping all of the news pieces that I see around BMNR and the Ethereum ecosystem adoption and grouping them into buckets and talking about them with an end of the week recap. This video, I have about 100 tabs that I want to share with you, and I really want to get under 25 minutes. It's going to be a big video jam-packed with information. So without further ado, let's jump right in. Now, if you are a BMNR shareholder or are interested in the stock, drop a like to this video, follow the channel for more, and share this video out. I've grouped the categories this week as follows. I started off with technicals, and then I have a bucket for rotation. I talk about international news that we got around Ethereum. I talk about accumulation. We have some ETHZilla news. I talk about the ecosystem, adoption, BMNR specifically, and macro. So let's start off, first of all, in the technical bucket. So, of course, some of you guys might be technical analysts and some might not care at all, but there are some positive patterns that are forming on Ethereum. So you see a bull flag here, which is a pretty conventional pattern forming on Ethereum where it basically back tested that previous resistance. And you could see a similar thing with BMNR here. With the last two times it went into this purple area, from a technical pattern perspective, you had a big institutional buying round and it just shot the stock up. And it does typically face some resistance here in the mid $60 range. So we've been seeing this steady stair step up from a technical perspective on BMNR. And of course, you have the Ethereum bull flag that is still in play. This played out in 2020, and we saw a big pump in Ethereum stock price. Of course, that was something like a 10x in Ethereum's price ever since that time, from $400 to about $4,000. And we're seeing something similar form a second time now from a technical perspective. We're seeing Ethereum has some decent bids here around $4,000 on Binance. This was a few days ago. If we're talking about upside, this user says Ethereum could face some resistance around the $4,300 zone. If bulls are able to reclaim that zone, expect another fast move to the upside. Again, we're just talking about technical patterns in this first section. We see the Bollinger Bands contract here. So you can see that the Bollinger Band is getting squeezed tighter and tighter. And of course, it can only squeeze so tight before it expands and we see an explosion upwards. And here's just another view of Ethereum on that technical pattern. So you saw the same pattern back in 2021 when Ethereum broke out. And in 2025, the same structure is in place. Of course, we had this back test, and we're going to see what Ethereum does from now. We also see the RSI has entered into oversold territory. The last time that this happened, Ethereum pumped 250% in just 5 months. So that's a whole bunch of technical indicators for you that some of you might care about, some of you might not. Let's move on now to rotation. So Crypto Rover posted this around gold and Bitcoin and basically saying that there is somewhat of a rotation happening between gold and Bitcoin. This is a better representation. So we saw gold reach those all-time highs and then just give up a lot of those gains. And we've been seeing Bitcoin has been catching a bit ever since that time with smart money rotating. We also see this trend line of altcoins versus Bitcoin. And so you can see that Bitcoin has a turn and then altcoins have their own turn. And this individual says if this trend line extends into 2025 and 2026, we should see the biggest alt season of all time. While some believe altcoins will never compete with Bitcoin again, I see the potential for the biggest liquidity rotation of all time. So Bitcoin, of course, is the rising tide that raises all boats, but altcoins definitely have a run after Bitcoin does. Here you can see that Ethereum is following the same playbook as Bitcoin. These are fractals that are overlaid on top of each other. Bitcoin 2024 and Ethereum is following that same pattern. This user says, if this echo continues, Ethereum is about to rip. Fractals don't lie when liquidity returns. The setup is done, the move is next. So again, talking about that rotation. And this post I found interesting. I still believe that once we enter price discovery for ETH above $5,000, it's basically game over. The repricing will almost certainly be one of the most violent events in human history. A little bit of hyperbole there, but I do agree that once we enter price discovery mode, you're going to get a lot of money piling into this. And we've seen this happen in many other prior examples. Let's move on now to some international news. The EU is going to print 400 billion euros by the end of the year. And obviously that's bullish for the crypto market because as you introduce more inflation through quantitative easing and printing, then theoretically more hard assets like cryptocurrency should come out on top. Stablecoin activity in Europe is surging and 40.6% of all transactions flow through Ethereum and Solana. The continent is already picking winners. ETH is becoming the financial backbone and Solana the high-speed rail. Now, one big news came out this week around Japan. So we see Japan's first yen-backed stablecoin. The JPYC just launched on Ethereum. Japan's biggest banking giants and Mizuho are gearing up to issue their own yen-pegged stablecoin. This is obviously bullish for Ethereum. We see this user saying that reading between the lines, the $4.7 trillion stablecoin estimate by 2030 only counts USD stablecoins. Other nations are catching up fast, with Japan having now just joined the race. No country can afford to fall behind on the stablecoin race. The global M2 supply is 111 trillion, with USD being 22 trillion. If every major economy issues their own stablecoins to compete, we're not talking about 4.7 trillion. We're talking about over $25 trillion in stablecoins globally by 2030. A global stablecoin arm race has begun, and it's all happening on Ethereum. And we also saw Tom Lee himself post about this Japan yen-backed stablecoin, and it's built on Ethereum, saying, anyone else notice a pattern and consistency to this news? I saw Bitcoin Archive here, a good recap around some major Bitcoin news over the past 24 hours. This is, of course, a weekly recap, so all of this happened this week. China buys 180,000 tons of U.S. soybeans, so we had some alleviation there from a geopolitics perspective. Germany's AfD party proposes a strategic Bitcoin reserves. Canada cut interest rates this week. Federal Reserve cut interest rates. Fed says it will stop shrinking the balance sheet on December 1st, with that quantitative tightening essentially coming to an end. Powell says another cut in December is far from heard, but I think that the market is pricing in another cut right now. Bitcoin falls below 110,000 as Powell speaks. Trump and Xi ease trade tensions in South Korea, and we did get something finalized. I think it's going to be signed on Tuesday, so we'll see how the markets open on Monday, but I'm expecting futures to be green. The Kingdom of Bhutan now accepts Ethereum payments for international tourists. The UK just approved CoinShares Ethereum ETF. Another major market just opened the floodgates. Ethereum is now being financialized at the highest levels. The world is moving on chain. Let's now move on to accumulation. These are just some of the pieces of news that I bookmarked with regards to accumulation. We can see here, Crypto Rover posts Ethereum supply. Whales are buying up Ethereum. You can see a big spike here, and you can see that all the other balances of Ethereum are crossed off here, and he's just looking at the balance between 10,000 to 100,000 ETH. Of course, the black line is the price of Ethereum. We can see Polymarket now has Ethereum at a 52% chance of hitting $5,000 per ETH by the end of the year. ETH at $5,000 feels extremely cheap for end of the year. And so you can see the sentiment is definitely there. We can see institutions are coming in. So Bitwise posted this crypto adoption by institutions. You can see all the major financial institutions here, Bank of America, BlackRock, so on and so forth. And most of them have crypto trading and custody. Most of them have crypto ETFs. Most of them have tokenization, and some have crypto-enabled payments and private crypto funds as well. So you're seeing all the major financial institutions in the world starting to adopt Ethereum. You're seeing them all dip their toes in. They told you banks would never touch crypto. Now every major institution trades crypto, runs crypto funds, offers crypto payment rails, is building tokenized stacks. Institutions are building the future on chain, and retail is still arguing about bull or bear, about whether we're going to be at 4,000 or 5,000. And all of this is sort of happening beneath our noses. You're seeing massive accumulation. I talked about this last week. We're seeing supply shock. This is the exchange reserve for Ethereum, and you can see that supply is plummeting. And here you can see it even easier. 6.7 million ETH left on spot exchanges. This is what I posted last week as well. You just go to CryptoQuant and you can take a look at what's left on exchanges, but you'll notice this trend that everything is going down. Ethereum is going off of exchanges. And when this happens and you still have the strong demand, well, the price is obviously going to go up because the supply needs to meet that demand. Coinbase announced their third quarter earnings, and it came out that Ethereum trading accounted for 22% of the total volume and 17% of the transaction revenue for Coinbase in Q3. I found this to be really interesting. This looks at the number of transactions and the Ethereum price. And this post says that Ethereum transactions are rising while sentiment is still dead. This is the exact same setup that preceded the 2020 and 2021 mega move. And we saw from a technical perspective, those same patterns also repeating as well for both of those time periods. Smart money accumulates before the chart moves. Ethereum is quietly coiling for its next leg upwards. We see this. I post this every single week. The top stablecoin supply changes in the last 24 hours. This was posted earlier today on November 2nd. Ethereum is the number one in terms of the supply changes. And we saw this as well. The mystery whale account that has a 100% win rate keeps adding to his long positions. Ethereum sits at 152 million, Bitcoin at 118 million, and his Solana position at 106.4 million. Let's now move into the ETHZilla news. So ETHZilla is selling $40 million in Ethereum from their treasury as part of a $250 million stock repurchase plan. I posted about this earlier this week. I made a dedicated video to this. So if you haven't seen that video, I highly recommend you do that because I dive much more in depth on the ETHZilla news specifically. But basically, they said we're trading way too cheap and we're going to sell some Ethereum from our treasury and use the money to buy back stock. Now, this is a good move in the short term, obviously. My critique for it was it's a bad move for what it signals because as a treasury company, you're sort of going against your ethos and you're not really inspiring that much confidence in people to buy ETHZilla over any other digital asset treasury company if you're going to sell your Ethereum. It sort of breaks that perception that these companies do not sell their underlying assets. Anyways, check out that other video. It goes into more depth. Let's move on now to some of the ecosystem news that we saw. So here we see from this user, Ethereum on-chain activity hits an all-time high. The network has never been this active. You can see this chart measures the total gas used per day on Ethereum, and it's just skyrocketing. We can see stablecoins are now bigger than most national FX reserves. The total value of Ethereum stablecoins sits at $183.2 billion. That would make it the 22nd largest reserve in the world. This puts Ethereum right behind the US and ahead of countries like Indonesia and Turkey. That's actually really crazy to think about. We see this post about Ethereum dominating real world asset values, tokenization. No chain even comes close. You can see this massive ramp here in Ethereum. Ethereum leads with $12.2 billion in tokenized real world assets, over 55% of the entire market. The total tokenized real world asset value is now at $21.9 billion. And you can see here that Ethereum is...
In this video, we're going to introduce the Smart AI Indicator, which we developed in partnership.
Most of that activity. Here we have Tom Lee on CNBC, and he is talking about the Ethereum activity as well. Let's give it a listen.
On the exchange, where you talked about the fact that cryptocurrencies tend to be early indicators of where stocks are directionally headed, as well as indicators of liquidity in the broader market. So given what we are seeing in Bitcoin, and as that relates to the S&P 500, and arguably what we're seeing in Ethereum, and what that says about the Russell 2000, I want to get your thoughts.
Yeah, I mean, I think it's sending a pretty bullish signal. Part of it is it's a counterfactual statement, but crypto had the biggest liquidation event, deleveraging event in history. You know, I mean, the number is probably multiples of what happened during FTX. And Bitcoin ends up down 3 or 4%. So I think it shows you that Bitcoin itself is proving to be a pretty good store value, because if we had seen this happen with gold in the gold market, if there was a huge leveraging event and gold was only down a few percentage points, we'd of course consider that a real validation. And it's also true of Ethereum, because Ethereum is seeing so much activity growth. I mean, on the L1 and the L2, because of stablecoins, and it's not reflected in the price. It does take time. So to me, because like what I call the fundamental activity on Ethereum is really picking up, it argues for a pretty big move at the end of the year as well.
Do you think we're seeing?
So that obviously speaks to the strength of the ecosystem. Ethereum here with $370 billion in user assets, 5 times larger than any other chain you can see here, more than Solana, more than Tron, more than Arbitrum, more than Polygon or Avalanche or any of these other ones. Layer 2s plus upcoming upgrades equals faster, cheaper, stronger Ethereum here. So you can see the sum of funds deposited into the applications on chain. Ethereum is dominating there. And one thing you have to keep in mind here is that real money moves on chain, whether it's funds or real world assets, ETFs, stablecoins, it's going to be on Ethereum first. This is part of our thesis. This is why we've said that Wall Street has Ethereum as the blockchain of choice. It's also the blockchain of choice for developers. So you can see the top blockchains here by builder interest, and Ethereum is at the top here, and top blockchains by monthly open source developers. And again, Ethereum is at the top. Ethereum owns not only the pipeline for developers, but it's also the most serious option for institutions that are accumulating and that are adopting an ecosystem on chain. Plus, its L2 is led by Base. Ethereum is a top destination for new developers in 2025, attracting the largest share of new open source contributors and startup teams. The market is multi-chain and the builders ship on Bitcoin, Solana, and others, but the center of gravity remains Ethereum, where developers find the most tooling, liquidity, users, and funding. Gas fees at record lows. Average transaction cost in Ethereum just dropped to 1 cent, one of the lowest in history. Ethereum slipped below $4,000 after the Fed's rate cut, but analysts warn it could be a bear trap. You see the transactions per second here, and this is going to get a massive boost. So you see the all-time high is 3,100 transactions per second. The new upgrade, which is coming in December, will boost it to 12,000 transactions per second. And with this new December upgrade, Base at 10 to 20,000 transactions per second in a few months. This is one of the best and most well-funded engineering teams in crypto, going ham to scale Ethereum. Open source code, everyone benefits. People still think Ethereum scaling is just the EF. I don't know what EF stands for. It's not. 24 of the best and most well-funded engineering teams in crypto are working to scale Ethereum, right? Some significant progress that's going on there from an ecosystem perspective. Over 2 million Ethereum have been burned since the merge. That equates to about $7.6 billion gone forever at the time of this post, which was October 31st, just a few days ago. And the burn rate is 1.22 ETH per minute. So again, Bitcoin has a fixed supply. Ethereum does not. And you're going to say, well, wait a minute, Ethereum has a lot of inflation as a result. Well, not when you're burning over 2 million Ethereum in total, right? So as you're burning it, that controls for the supply. Standard Chartered, tokenized real-world assets could hit $2 trillion by 2028, with the vast majority built on Ethereum. The Ethereum network activity, look at this, the application revenue, 42.6 million. Layer 2 share is 17.56%. Stablecoin supply, 188 billion with 7.7% Layer 2 share. In October, this hit an all-time high in October, and stablecoin supply will continue to climb higher. I saw this posted like 3 or 4 times by different people. Weekly stablecoin transfer volume on Ethereum is up by 1,000% from May of 2023. This is important, and the reason why is because it speaks to Ethereum's dominance in the stablecoin market. The fundamentals are getting stronger, and this has to do with the accumulation that we've been seeing. It has to do with all of this other news it's reflecting in the network. So all of this is signal for people to pay attention to where the money is flowing, what the volume is looking like in the ecosystem itself. It's all public. You just have to pay attention and actually take a look at how the adoption is looking. And speaking of adoption, OpenBank now offers Ethereum services. IBM is exploring Ethereum payment services before year end. This is just a rumor. We see Ethereum ETF inflows of $133 million just yesterday alone, with BlackRock buying 72.5 million in Ethereum. We see Citibank, with 2.6 trillion assets under management, has officially partnered with Coinbase to expand Bitcoin and crypto payments. The banks are adopting it. Samsung enables Ethereum staking on Galaxy devices. Over 200 million people now have one-tap access to Ethereum Yield. And this is actually really bullish because staking is becoming a standard phone feature. And that's something that will really democratize that access across the board. JP Morgan to launch an investment fund tokenization program in 2026 on Ethereum. Goldman Sachs now offers Ethereum's option trading. We see the highest monthly total transaction count ever for the Ethereum network in October, breaking its record 6 months in a row. So you see this chart is absolutely parabolic here. And this is for Bitcoin, but we see institutions that are record for Bitcoin buying. ETFs and public firms have already bought 975,000 Bitcoin this year, while miners have only created 136,000 Bitcoin. Supply shock across the board for Bitcoin as well. This is the demand, this green bar, and this is the supply, this gray bar. So you can see a massive disparity here over the last 2 years. This is absolutely staggering to see for Bitcoin, and it's going to be staggering for the entire ecosystem. We see Roy here posting saying Robinhood has tokenized nearly 500 stocks which trade on chain via Arbitrum. Volumes are quite low, with $38 million traded cumulatively. But it's interesting to see what has the highest volume. Nebius, which is my second largest holding, is the number one tokenized stock by volume. BMNR is number 4 here, which you can see. So we're going to keep an eye on this as this continues further, but that's really exciting. Now, let's talk about BMNR specifically. Tom Lee is telegraphing every single move. He's saying it publicly. He's talking his book, but he's also highlighting why this is important. They are buying more Ethereum every single week. And we saw they just provided a latest update for last Monday, $14.2 billion in total crypto plus moonshots, 3.31 million ETH at $4,100 per share. Let's take a look very quickly here. These are the weekly buys in Ethereum. So we can see every single week they buy more and more ETH. BMNR currently reigns as the largest ETH treasury, largest holder of Ethereum in the world, second largest digital asset treasury company in the world, behind only MicroStrategy, which is the biggest Bitcoin treasury in the world. You saw progress on the US and China talks. I covered this post on Tuesday when I talked about the ETH news, so I won't really go in depth on there, only to say that BMNR is continuing their accumulation pattern. I also saw this post. Tom Lee's BMNR has reportedly bought 44,000 ETH worth approximately $168 million today on October 31st. So we're going to see when that update comes out next Monday, because that's when they update their holdings every single week. But we can see their wallets are still buying more and more Ethereum every single week. Bitmine invested year to date. This yellow area that's going up and to the right is their accumulation. Since the October 10th wipeout, they have deployed over $2 billion into Ethereum. And you can see the Ethereum stock price here, which has sort of come down since mid-September. And as you can see, it's come down. You can see massive purchases here from BMNR. That's just buying the dip. Here you have Bitmine, $12.2 billion in terms of their Ethereum holdings. And you can see their wallets have been buying as early as 2 days ago. So here it's very easy to see when Bitmine is buying in real time. This is also Bitmine Rocks here, where you can also see some of the same information. Bitmine is over 50% of their goal to own 6 million Ethereum, or 5% of the total supply, after which point the idea is that they're going to stake that supply. They also released some investor relations documents here. So, I mean, we had this presentation from Token 2049 Singapore, but they also released this deck here earlier this week around Ethereum, saying stablecoins are having their ChatGPT moment. 53% of the total stablecoin value is issued on Ethereum, more than double the nearest chain, which is Tron. You can see some macro news, which we're going to jump to in just a second. Tokenization is massive. I've shared this exact screenshot before. Robinhood CEO is saying tokenization is a freight train. We've shared that exact clip before. AI and crypto. A lot of this stuff we already know, but this is all public. You can go on Bitmine's investor relation page and you can take a look at this whole presentation. I also highly recommend you take a look at the chairman's message tab here with Tom Lee's keynote, because this is one of the best explanations of Bitmine that you're ever going to see. Now, let's move on to the final category, macro, because this video, again, is way too long. Breaking, U.S. senators are racing to wrap up the crypto bill before Thanksgiving. Coinbase's CEO believes there's a real shot it gets passed before 2025 is over. Here we have the SEC chair, Paul Atkins, saying Ethereum is not a security. Let's take a listen.
This is the Wonder Oven Pro from OurPlace, our next generation non-toxic air fryer toaster oven. Now with 8 unique cooking functions and precise digital controls. It's everything you love about the
why this might just be one of the most important and maybe even undervalued plays in the entire AI revolution.
All right, let's just start with the number that, honestly, it'll stop you in your tracks. $17.4 billion.
So what is that? Well, that's the size of the massive contract Nebius just signed with Microsoft. And look, this single deal, it didn't just put them on the map. It completely changed their entire trajectory. It basically validated them as a go-to partner for the biggest names in tech, period.
And hey, if that wasn't enough to get your attention, here's another jaw-dropper for you. 625%.
Yeah, that is their year-over-year revenue growth. I mean, this isn't just impressive, right? It's a sign of absolutely explosive demand and some incredible execution. And get this, that's even before that massive Microsoft deal fully kicks in. Wow.
So, all of this, it naturally leads to a really crucial question, right? Where on earth did this company come from? And with this kind of crazy momentum, is it maybe the smartest bet you can make in the high-stakes game of AI infrastructure? Well, we're going to break it all down.
All right, so here's the game plan. We're going to start with their pretty unique origin story. Then we'll dive into what they call their full stack advantage. We'll put them head-to-head with their biggest rival, deconstruct that big valuation, take a hard look at the risks, and then, yeah, we'll get to a final verdict.
Okay, first up, the origin story. Because, look, to really get Nebius, you have to understand where it came from. And that's the Russian internet giant Yandex.
Now, it's super important to understand this. This wasn't some kind of fire sale. It was a really strategic move, an unbundling. Nebius basically inherited a team of over 500 engineers who had spent decades building one of the largest cloud platforms outside the US. And that deep institutional knowledge, that's their secret weapon, for sure. And they didn't just inherit all that engineering talent. They also got this whole portfolio of other stuff, what they call non-core assets. We're talking things like an autonomous vehicle platform, an edtech company, and the whole thing is valued somewhere between $2 and $4 billion. This gives them this incredible financial flexibility that, honestly, a lot of investors might be completely overlooking. Okay, so let's see how all of that history builds into their main strategy. It's what they call the full stack advantage. And believe me, this is what really separates them from the pack. So what does that mean? It means Nebius controls everything. From the custom-designed hardware, the actual racks and cooling systems at the bottom, to their own proprietary software in the middle, all the way up to the application services that their customers are using day in and day out. This kind of vertical integration, it creates something called operational lock-in. It's a fancy way of saying it's just a lot harder for their customers to pack up and leave.
And here's the real kicker, the ultimate prize. Because they own that entire stack, Nebius gets to keep way more of the profit. This gives them a totally plausible path to getting software-like gross margins. We're talking 60 to 70%. That's something their competitors, the ones who just lease and resell hardware, they can only dream about numbers like that. Okay, so you really can't talk about Nebius without bringing up their biggest rival, CoreWeave. So let's do it. Let's put these two neo-cloud titans head-to-head and see how they stack up.
Man, this table really tells a story, doesn't it? You've got Nebius, who owns its infrastructure outright. That gives them a super clear path to those high margins we just talked about. Then you've got CoreWeave, on the other hand, who relies heavily on debt and leasing. Get this, their financing costs are actually higher than their return on assets. That's tough. Plus, Nebius is spreading its bets, diversifying its customers, while CoreWeave gets almost all its revenue from just 2 major clients. Big difference.
And hey, don't just take my word for it. Wall Street is really starting to take notice. Seaport Research, for example, came out and said that Nebius leads on the metrics that matter most: customer mix, unit economics, and the strength of their balance sheet. The market is definitely waking up to these huge differences.
So that brings us to the big question. What are investors actually paying for with Nebius's $29 billion valuation? Let's deconstruct it, piece by piece.
Okay, when you really break it down, a massive chunk of that value, we're talking up to $17.4 billion, comes directly from that Microsoft deal. That's contracted, predictable revenue. Then, you add in their fast-growing core business, and you toss in those valuable non-core assets we mentioned earlier.
So this kind of weighs out the different ways this could go. You've got your base case, right, where they just deliver on the Microsoft deal. There's some potential downside there, sure, but it seems manageable. But the bull case, that's where things get really exciting. If they can land just one more major customer like that, the potential return becomes really, really significant.
Now, I know what you might be thinking. On the surface, Nebius looks kind of expensive, right? It's trading at a way higher trailing revenue multiple than CoreWeave. But, and this is the key, once that Microsoft revenue is fully online and humming along, its forward multiple just drops dramatically. Suddenly it starts to look much more reasonable, maybe even cheap, assuming, of course, that they execute.
Of course, no investment is a sure thing, and this is no different. So let's be realistic and take a clear-eyed look at the challenges that could totally derail this incredible growth story.
Okay, first and foremost, you've got execution risk. Scaling up from where they are now to handle the full Microsoft contract is a massive operational lift, no joke. Then, future growth is probably going to require more capital, and that could mean diluting shareholders. And you have to remember, the whole bull case really hinges on them winning more of these huge deals, and that's just not guaranteed. Not to mention, if there's a broader slowdown in AI spending, well, that would impact the entire sector.
So, all of that brings us to our final verdict. Let's try to synthesize everything we've talked about and boil it down to one core question. I mean, listen to the CEO himself. He's already set the expectation pretty high. He's on record saying he sees the Microsoft deal not as a one-off thing, but as the first of many contracts with leading AI labs and big tech companies. So, at the end of the day, the entire bull case really hinges on one thing. Do you believe he can deliver on that promise? So here's the final thought to leave you with. Nibius has a really unique model. They've got a world-class team, and now they have this landmark contract that gives them a super solid foundation. The question you really have to ask yourself is this: are they building a sustainable, long-term kingdom in the AI infrastructure space, or is this just a single, heavily fortified castle in a vast and really competitive land? I guess we'll find out, because the answer is going to unfold over the next 12 to 18 months.
All right, that is Nebius for you. I've gone ahead and posted all of the due diligence on Nebius, due diligence on Duolingo, BMNR, Nebius. Oh, this is definitely not deep dive on Duolingo. It's actually BMNR deep dive. There is something wrong here. The Discord. Let me delete this because it doesn't look right.
You know, in the crazy world of AI,
I posted my deep dive, the deep dive here on Nebius. Definitely go check it out. There's a deep dive video on Grab as well. So we got Grab, we got Nebius, we got BMNR here, and Duolingo as well. And we are missing Duolingo, Ethereum, BMNR, Nebius, and the most recent one. I think we're missing one more deep dive here. If you want to, that's on my X, and go check out my X channel. I have provided all of the videos there, but I am missing one more company, and I think that is Grab Deep Dive. So what I'll do is I'll go and post my Grab Deep Dive. That is, Grab Deep Dive is missing. So Grab Deep Dive is not posted, so I'll post that. If you are into any of those companies, make sure you follow me. I try my best to stay up to date and continue to post videos on and what's going on. The price is expected to be $7 by 2027, so not long from where we are now. And before you know it, the stock will be at $7. I'm sure it will be at $7. For what they're doing, they have the financial services, they have food delivery services, and also they're partnered up with OpenAI, and might be worth reading. Yep, as a daily Grab user, it might be worth reading. Yeah, so they have a lot of products under their wing. The fact they're partnered up with a company like OpenAI, it makes them really a competitive company. I swear I thought I posted Grab DD. I guess I didn't post my Grab due diligence. You can follow me, the same thing, financial education and business. You're able to see all the posts I have liked or reposted, ecosystems around what's going on in the Solana world. Obviously, there's a Solana ETF. If you want to buy a company, they consider them DATs. All they do is they issue debt and they buy Solana. So if you're interested in that, it's called the DeFi something. If you type in DeFi, it should come up as the first company. Their name might as well tell you here. DeFi. Here it is. DeFi Technologies. And all they do is buy Solana cryptocurrency, and they hold it on their portfolio, just like BMNR buys Ethereum, or MicroStrategy buys Bitcoin. So DATs are becoming a very important part of the traditional market right now. We have we have a lot of companies that are going. I think they also have one that buy specifically like meme coins. So if you're into meme coins, that's something that's out there as well. So you can go check that out too. But yeah, this is my X account. You can go ahead anytime there's a due diligence around some of the companies that I talk about. I do post a quick video as well, and I try to tag the individual that I got the due diligence from. But it does a decent summary if you don't want to read or go deep read the deep dive, because it can be, it can be pretty long. So you can just go ahead and look at that. I'm going to be posting Grab Deep Dive, and I'm going to try to leave all of them at this hashtag. I believe it should be the only hashtag that there is. Let me see. Let me just see. It's kind of stuck here. Yep. So this hashtag is saved for me. So all you have to type in is Amit DD stocks, and all that hashtag will have all of the due diligence I have posted on there, and you can go through and search. Within here, you can search whatever stocks that you are interested in, and then obviously you can use from there. You can just click on this explain this post, and what it will do is it will go right into Grok, and you can go as deep as you want on the analysis of the company, which is pretty cool. So it's AI, all AI generated. Sometimes it takes a little too long, which is annoying. But I'm going to be posting my Grab on my YouTube video. I've posted this as well. You should be able to see it. I do need to group all my due diligence in there. Nebius is dropping tomorrow, but you can go ahead and just go into my account and see Nebius is already posted, and you can watch my Nebius due diligence. This company, as you know, is fully focused on AI, and that's it. So you can focused on data centers, and they have amazing partnerships. So you can go ahead and see that. So this is the 7-minute video. Most of the videos are 7 to 8 minutes, so you can spend 7 to 8 minutes and really learn about some of these amazing companies that are out there in the market. I always like my video because my video is the best, so I always give it a like. The futures are in the stock market are looking good. We've had really amazing earning reports so far. I'm excited for Monday. Monday, the companies that are reporting are not really that impressive at all. But Tuesday is going to be the best day that we're going to see, because some of my favorite companies are going to be reporting in the morning. You're going to have a company like Uber, Shopify, Spotify, Race. I have no idea. You got Hut 8 Mining reporting there, Hertz reporting, and then after hours you have AMD, SMCI, Antes, Kava Group reporting, Upstart reporting, Zeta, AI marketing company. So there's a lot of like really awesome companies reporting, but overall, the company's Q3 earnings reporting has been amazing. As you can see, even Monday of last week, all we see is greens. Like we see some reds here and there, but overall, companies are reporting really good earnings, and so which kind of indicates the economy is doing decently well, at least last quarter. And so we don't see any type of weakness. I mean, you're seeing some of these companies like Coinbase, EPS by 32 and revenue by 4.9. So Apple beating on top and bottom. Amazon beat up the market. They did so good on their earnings, and also they're doing a lot on the data center. They have their own chips, so they don't have to rely on a company like Nvidia. They have already have properties. They've built out a data center already, and they're building additional ones. MSTR, I really don't have this company, but they've also reported numbers. Reddit, I think it's a great company there. They've also reported, and then cybersecurity, Cloudflare, they've reported really good numbers. As you can see, they beat their EPS by 107%, which is insane. But yeah, overall, what we see is just an amazing economy with the federal government, Jerome Powell, coming out and saying, you know what, they lowered rates by 25 basis points. They plan to continue to do this going into December. They kind of said like, oh, don't assume that we're gonna lower rates by December. But I think they did that just because they didn't want the market to overreact and overprice everything, and so they're trying to not overheat the economy at the same time. So there's a chance Jerome Powell's going by December they're gonna come out and say, well, we're gonna continue to reduce rates going into ending 2025, and on top of that they've already started doing quantitative easing. They bought back mortgage-backed securities and treasuries of worth up to like $50 billion, meaning they're buying back their debt, giving out the money to the banks and investors, and which means they're adding more liquidity to the stock market. There is some fear around liquidity, especially in the private markets, private credits, just because it seems like there's some bad loans that are going on. But besides that, overall, banks that reported their numbers did amazing. We saw right here, MasterCard reported really good numbers. MasterCard, as well as SoFi, reported really good numbers. Bank of America, BNY Mellon. Usually the financial market reports at the beginning, so they report first and then everybody else follows after that. I may have to view it like this so I can find the banks here. We got AMD. Let's go back 1 week. All right, here we go. So you got PayPal that reported, that was SoFi that reported, Visa that reported on Tuesday, and all the numbers were actually really good. See, SoFi, PayPal reported the numbers. They did really good. Visa, they beat top and bottom as well, which is also really good numbers here. MasterCard, they reported as well. Anybody else? There should be more banks, but overall, just to say, like, banks are reporting really good numbers, so there's nothing to worry about from the bigger institutional banks. Like BNY Mellon also reported. BNY Mellon, actually it's BK, reported good numbers. I believe they beat top and bottom. And the stock, I believe, I don't know, I think they did get up 107. They did get rewarded on those earnings on Monday. They didn't move. They reported at least a week ago. Yeah. So I don't know when they reported. Actually, it doesn't say. Let me just make sure here. October 16th is when they reported. So they reported around here, and the market has given them the stock did go up due to that decent numbers. So overall, like, banks are reporting. The S&P Global also reported pretty good numbers as well. Here you go. They beat top and bottom. So we have overall healthy economy, so nothing to worry about from that direction. I think that is all I am gonna cover. I've been on live for some time, at least 5 hours. Crazy time flies by. I am gonna end it here. Make sure you subscribe. I'm gonna try to go live for some earning. I don't know if I think November on Monday. I don't know if I'm interested to see. Fubo is going to be a really interesting company to see. I think the whole deal with Disney that just happened, where Disney literally pulled their sports off of YouTube. So for a lot of people that have YouTube Premium, that now they can't watch a lot of the sports, and that is now under a totally different department. So they can't even play that anymore. So because they didn't come to a conclusion, so Fubo is gonna have that benefit. So now Fubo is gonna be with Disney. Disney owns about 70% of Fubo's company, which means now Disney can say Disney can push Fubo Sports to Disney Prime, Disney Premium owners, I guess Disney Premium subscribers. For those that like sports, Palantir's reporting after hours. Hims is also reporting. So there are some companies that I am interested in that will be reporting Monday, but Tuesday is definitely the big companies, as well as Wednesday and Thursday. Stay tuned. I'll be live at least for 7:30 a.m. maybe for Fubo, and I will be at work, so maybe not for these other companies, but I will definitely be on for Tuesday around for aftermarket. I want to do a quick reaction to what the numbers that are reported, SMCI, Upstart, and Uber, and AMD. So that's all. Thanks so much for being here. Make sure you subscribe. I'm going to be live. You'll always have me posting stuff on X as well. You can follow me there and subscribe here on my YouTube channel. Thank you for joining me. Have a great rest of your day. Good night. Peace.